Kaylee Lyons will be speaking with Senator Amy Klobuchar. Very much looking forward to that later on in the hour. But let's kick it all off for you. Here is Charlie Pellet with a Bloomberg Business Flash.
Thank you very much, Alex Steele. Here's what's going on. Stocks lower across the board. The Dow, the S&P, NASDAQ very much in the red. We are off session lows, but still a decline of 0.4% on the S&P, down now by 26 points. We've got the Dow down 243, lower now by 0.6%. NASDAQ lower by 0.5%. 10-year 4.38% with a 2-year 4.24%. Spot gold trading lower by 0.5%, 26.39 the ounce. West Texas Intermediate crude slumping 2%, back below $70 a barrel on WTI, 69.34 where we stand right now. And Bitcoin holding above $106,000. Bitcoin up now by just about 0.3%. Fed Chair Jay Powell is widely expected to deliver a quarter point of easing tomorrow, but Drew Mattis, chief market strategist at MetLife, told us on surveillance this morning he's questioning the need for a cut now.
You know, is the Fed making a policy mistake? And if they are making a policy mistake by cutting too quickly or continuing to cut too quickly, you know, how do they reverse themselves in the future? Do they just pause for a longer period of time? Or are they going to be, like some people are out there saying, or are they going to have to reverse course? And I think the more they cut rates now, the more likely it is they're actually going to have to reverse course later.
Drew Mattis of MetLife, and you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Pfizer is forecasting 2025 sales and earnings in line with analyst projections. It is a step toward fending off an activist investors' claims that the drug maker is being mismanaged. On a down day for the rest of the market, Pfizer shares up now by 4.1%. Recapping, stocks lower, S&P down 0.5%, the 10-year ahead of the Fed decision tomorrow, 4.38%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast. Charlie's just reporting a little bit of a sell-off here in the equity markets. Let's break it down with Vince Signorello, Bloomberg macro strategist in our Bloomberg Interactive Broker Studio. This is just almost an act of God. I had to figure out
like
what's going on.
Like he's not in his basement.
Not in his basement.
In a basement cave. Guys,
exactly.
This is huge.
In his man cave. He's actually here in the office. Vince, what are you seeing out there in these markets over the last several days here? We're going to have the Fed tomorrow, and that'll certainly be a data point for this marketplace. But what are you seeing out there?
Well, I'm actually doing a post on this for the MLive blog. It should come out later today. The Conference Board does a survey every month, obviously, but along with that survey, which we don't really look at, is they ask households their expectations of whether stocks are going up or stocks are going down. And the percentage of household surveys that think stocks are going to go up are at the highest they've ever been, and the divergence between those who think it's going up versus going down is the widest it's been since 2009, when it was flipped and people thought stocks were going to go down, not up. So there's a lot of sentiment indicators out there that really signaling an overbought situation, and that maybe would do for a correction.
Yeah, and that just echoes Bank of America saying that
Yes.
AUM cash pile now under 4%. That's usually a sell signal. Does any of this matter though, as long as there's ample liquidity in the market and the Fed is cutting, period?
You go back to, we were just talking this with my colleague, Bill Maloney, you go back to long-term capital days, and you think that mean reversion always happens, and it does always happen, but you can have a lot more passes of standard deviations than you think. Mm-hmm. And so the case is, how far this can be stretched. It eventually will revert, but are we there yet? It's hard to say.
We haven't had a meaningful pullback, which I will define as more than 10% in the long time. I mean, I guess back in July, we had that 8-9% pullback. And that's, for a lot of folks, that's worrisome. Yeah. I mean, you need in a structural bull market to have some meaningful drawdowns, as the kids call them. Haven't seen that, really.
No, and you haven't seen a pullback what some would even look at as 20%, like in a dog's age. So that would be the kind of situation I think you would need that would get households scurrying. But as you mentioned, retail sales are doing well. The consumer seems to be doing well. The Atlanta Fed GDP Now index is above 3% for GDP growth. it's not showing any signs of stopping, and the only thing that's probably going to stop it is inflation, and we'll see if tariffs bring that on next year.
Interesting, though, if the cash pile keeps dwindling, eventually there'll just be less cash to put to work.
Sure.
So maybe that changes that buy the dip scenario. I think it was T. Rowe Price, actually, that came out and said they think that the 10-year is going to hit 5% in the first quarter, and it could go all the way to 6%. What do you think?
I totally agree with them, actually.
You do?
Yeah, I'm actually in the Jamie Dimon camp. I think we can, over the next 3-4 years, see 7% on the 10-year.
But the Fed's cutting rates.
I don't think they're going to be cutting it all next year, to be perfectly honest with you. I think we're going to be done in December. Inflation is very sticky. One of the things that we're seeing, and it's something else that I was looking at, is import prices are going up, and they lead CPI sometimes upwards of 9%. And we've seen those prices going up. And when we get tariffs, which we will in some way, shape, or form, we're going to see import prices at least stabilize, if not go higher. Don't see how the Fed can cut in that situation if CPI is going up.
All right, Vince, it's so good to see you.
Good to see you, too.
You're real? He's 3D or 4D? Is he 4D? If I can, he's 3D. There he is. Okay. It was good to see you, Vince. Chat with you later. Vincent Signorella, Bloomberg macro strategist, joining us in studio. So let's get more on those retail sales. Mari Shore, senior equity analyst at Columbia Threadneedle Investments, joins us now. On the headline, it looked quite good, particularly when it comes to the jump in car purchases. What were some of your takeaways from the report this morning?
Yes, thank you again for having me. As you said, it was a solid sales report across the board, even when adjusting for the later start to the holiday and the unfavorable weather in the first part of the month. And we're really seeing the consumer show up and spend across category into the holiday season as we expected.
That's kind of where I want to go, Mari. What are you hearing from the retailers just about the holiday shopping here?
Yes, it's interesting because I think it was a very strong Black Friday. There was a lot of concern, as we spoke about, regarding the shorter holiday selling season. But I think that has, in fact, really motivated consumers to get out and spend. And if anything, I think the retailers have been positively surprised by the performance in the business post Black Friday. And we've even seen in some cases them pulling back slightly on promotions. So I think overall the tone from the retailers is optimistic, and hopefully we continue to see the strength as we move through this final period.
TBD on tariffs, though. So I'm wondering two things. One, what you've heard from retailers about how they prep for tariffs, and two, if we get a sense if people are buying ahead of, particularly maybe when it comes to cars, for example, or like a dishwasher or something along those lines.
Those are great questions. Most of the companies that I speak to have been moving production out of China for almost 10 years now. So actually, a lot of the companies are suggesting that the impact from tariffs will be pretty limited. I would say the one real exception is consumer electronics. Listening to Best Buy talk, they still say 50% of their goods are sourced from China. So outside of consumer electronics, I think the companies feel pretty good about their ability to manage through this situation. But of course, they are also saying any tariffs that they do feel, they will try to pass along some of that cost to the consumer. In terms of bringing in goods earlier or consumers buying goods earlier to get ahead of that, I don't really get the sense that companies are going to be doing that aggressively because there are still a lot of questions about what the tariff outcome is. So I think those impacts are more minimal at this point.
How are consumers paying for this stuff that they're buying with all these goods and services here? It seems like they've drawn down. I hear reports that they've drawn down their savings. Are they putting this stuff on credit, and is that a concern?
I think at the lower end, we're absolutely seeing that consumer, which has, been stretched for a couple of years now, rely more on credit, as you said. But at the high end, that consumer is in very good shape with the wealth effect between the housing market, the stock market. So I think that consumer is, behaving a little differently versus at the low end where we are seeing them rely more on credit.
What are your top picks right now?
So My top picks are kind of a combination of some of the quality share gainers that we've talked about on this show. So some of the large retailers that offer that combination of value and convenience that's really resonating with the consumer right now. So I would put, the Walmart, Amazon, Costco, TJX in that bucket. But then on the other hand, I think there are some really interesting turnaround names, specifically in the apparel space, where you don't need a lot of top line growth to generate pretty meaningful margin and free cash flow improvement. So some of the names I would highlight on that list would be some of the specialty retailers like Gap and Victoria's Secret, and even some global brands like PVH and Contour brands.
All right, Mari, thank you so much for joining us. Mari Shore, she's a senior equity analyst at Columbia Threadneedle Investments. I'd love to chat with her on these days when we get retail sales to get a sense of how the consumer's doing out there. Let's go up and talk about our good friends up above the border here. The Canadian dollar slid to its lowest level since March of 2020 as Prime Minister Justin Trudeau's government slips into crisis after the shocking resignation of his finance minister. Get some latest reporting there. Derek Declouet joins us. He is Bloomberg Executive Editor for Canada. Derek, what's the latest reporting on Prime Minister Justin Trudeau's role at this point?
Well, Trudeau is in a lot of trouble. I mean, his popularity has been slipping for some time, but the loss of Chrystia Freeland as finance minister and the way that she resigned yesterday has shaken the government to its core. I mean, she wrote a letter that essentially suggested that the government was not being serious enough in preparing for the second Trump administration, that it needed to keep, its fiscal reserves ready to respond to what could actually be a recession in Canada if Trump carries through with his threats, and that the Prime Minister wasn't taking her warning seriously enough. It's hard to overstate how damaging that is to Justin Trudeau, because Chrystia Freeland, who quit on him yesterday, is been side by side with him the whole time he's been in power. She was his most powerful minister.
So, Derek, that really raised the question for me: why did she do this? Like, disagree all you want behind closed doors, but this public display just seemed really odd. So why did it come down to this?
Well, I mean, what it comes down to is it certainly appears that the Prime Minister was sort of undermining her on the side and had suggested he wanted to move her out of the portfolio into a less powerful role. And she has taken lots of hits for the government, and it's as I said, it's a very unpopular government. She had just had enough. There's also kind of the embarrassment of the fiscal situation that's going on, that the deficit last year was 50% higher than she had said it would be. And she knew she would take a hit for that as well. So it's a classic political falling out of two close allies who just came to be at odds about how to go forward.
What is the next, milepost for Prime Minister Trudeau here? What's the next data point we should be looking for?
Well, it has now come to a question of whether or not he can survive. And so things that we're watching for, we know that there are at least about 24 elected Liberal Party members in Canada's House who've called on him to resign. That's about 25 of 150 or so members. So if that number starts to snowball, it might be game over for him. Also, if there are any other cabinet defections, he's lost 2 cabinet ministers now in the last 3 days, and can ill afford to lose any more. And that's what we're watching for as we head into the Christmas break. His political future is very uncertain.
Here is my totally unfair question. We have what happened in South Korea. We have France. We have Germany snap elections. We have Canada. Why is this all happening? I mean, I appreciate that they're all different stories, and you can make an argument that they're all idiosyncratic. But these are rich G7 countries or very rich developing markets. Why are we seeing all this right now?
It's a great question. And yes, they all have their unique elements to them, but they also have a few things in common. We've gone through an inflation shock. We're in a moment of great geopolitical instability. And I think in the case of Canada, you can definitely say that there is a kind of direct line between the election of Donald Trump and what's happened in Ottawa and the instability of a 9-year government in the case of Justin Trudeau that is already sort of long in the tooth, if you will. Trump is certainly a factor globally. In this case, you can kind of draw a pretty close link.
So, Derek, we did see Prime Minister Trudeau go down to Mar-a-Lago to meet with President Trump. How did that play politically in Canada?
It actually played not badly because he was seen as he was doing the thing that he had to do for Canada. He got on the plane. He took Dominic LeBlanc, who's now the finance minister as of yesterday, but at the time was the sort of border security minister. They went down. They had a good meeting. I mean, you have to do this, right? You have to establish links with not only Trump but with Trump's people if you're going to get anywhere in the discussion. So that was seen as the responsible thing to do. I think the thing that the Canadians sort of wince at is the subsequent taunting that came from Trump, but the 51st state and Governor Trudeau and all of that sort of thing. But that's Trump. That's how he rolls. And but now that Chrystia Freeland is not by Trudeau's side anymore, it seems unlikely that Trudeau is going to get any lasting benefit from that early move to speak to Donald Trump.
Excellent reporting, Derek. Thanks so much for joining us. Derek DeClouy, executive editor for Canada, Bloomberg News, talking about Prime Minister Justin Trudeau having his own troubles with his government in Canada. Again, finance minister abruptly and surprisingly resigning this week. S&P 500 off 23 points. That's 0.4%. The NASDAQ, that's off 74 points. That's about 0.4%. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower across the board with the Dow Jones Industrial Average on track for its 9th straight decline. It would be the longest losing streak since 1978. Right now, we've got the Dow down 0.6%, down 243 points. S&P 500 index, to put it all in context, tumbling now by 0.4%. The S&P off session lows, but still down 23 points. NASDAQ lower by 78. Big tech declining. We have got NASDAQ down now by about 0.4%. The NASDAQ 100 index also down by 0.4%. And the Russell 2000 index is slumping by 1.1%. 10-year at 4.38% with a 2-year 4.24%. Spot gold down $14 the ounce, 26.38, down 0.5%. And West Texas Intermediate crude oil trading lower by 1.6%, below $70 a barrel, 69.57, and Bitcoin at 106,692. The Biden administration has taken another step in its push to combat those so-called junk fees as the Federal Trade Commission mandates more price transparency for consumers shopping for live event tickets and hotel rooms. According to the FTC, that rule will save consumers as much as 53 million hours each year spent searching for the true cost of tickets and lodging. Live Nation entertainment shares, they're down today by 0.5%. Recapping, S&P down 25, a drop now of 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube. So head over to youtube.com, search Bloomberg Podcast. It seems like in the electric vehicle market, it seems like the narrative's changed a little bit over the last 12 months. Got a little bit more of a bumpier road in terms of demand here in the U.S. at least. Even with those headwinds, EV sales are on pace to cross 17 million units globally this year. So it's still a business and it's growing. Let's get the latest. We can do that with Corey Cantor. He's the lead U.S. electric vehicle analyst for BNEF. He joins us live here in our Bloomberg Interactive Broker Studio. So Corey, let's just put 2024 kind of in perspective. What are some of the big themes about the EV market?
Yeah, it's great to be here, Paul, with you and Alex. I think bumpy road, EV kind of sales growing at different paces in different places is kind of a big macro theme. Really, in China, you continue to see electric vehicles speeding ahead. You had months this year in China where EV share of sale was greater than 50%, which is pretty monumental when you think about it. The world's biggest car market and having electric vehicles make up more than half. Here in the U.S., you're going to see some growth, not a sales decline, I think, as some feared maybe at the beginning of the year, but a bumpier road, ahead for sure, as the #1 U.S. automaker Tesla has kind of shifted lanes into this autonomous vehicle space, while BYD, their kind of main global competitor, is speeding ahead on electric vehicles, but a lot more of those kind of range-extended EVs coming. So it's going to be interesting, to say the least, moving forward. I
quoted before, when I was teasing the interview, that Peter Navarro spoke to CNBC earlier and said that President Biden's EV mandate will be gone under Trump. What would that do to the EV market?
It would mean that there's less pressure, Alex, to sell electric vehicles here in the U.S. So when President-elect Trump has referred to that EV mandate, he's talked mostly about fuel economy standards for model year 27 to 32 that Biden put in place and finalized earlier this year. There's a lot of back and forth on fuel economy during the previous Trump presidency. So there's less pressure, but the world isn't, moving back on electric vehicles. So whether you're talking about Europe, whether you're talking about China, they're kind of full steam ahead, and it's getting more and more competitive. So we're going to have to grapple with it, regardless of how fast we move towards electric vehicles.
So I get the China story. That seems to be a clear mandate there. Is there really still that momentum in Europe? Is that sagged at all?
It has been a challenging year for EV sales in Europe, and you also have a lot of the kind of confluence of factors in terms of, some subsidies being removed in terms of some of the cheaper models there, in terms of the Chinese automakers attempting to sell into Europe. So yeah, it hasn't been full speed ahead there, but Europe EV share of sales is quite a bit higher than here in the U.S. in the 20 to 30%, depending on what market you're talking about. So yeah, definitely not easy. I don't think anyone in the kind of EV space thought the transition would happen overnight, but you're seeing the kind of first major challenges. Of course, here in the U.S., California is going to be continuing to push that transition ahead.
So what you should all know about Bloomberg BNEF is that their research is quoted all across the street, particularly when it comes to EVs. So when they make their prediction about what 2050 is going to look like 2030, every other car analyst on the street quotes that number. What is that number?
All right, we're talking for U.S., we lowered our kind of EV projection for the U.S. to about 33%, and that's because of the policy uncertainty of the
33% of sales by what period of time?
by 2030.
By 2030, one third of the cars.
Yeah, one third.
Okay.
That's battery electric and plug-in hybrid electric vehicles. So
Okay, and what was it before?
it was 48%. So we saw that,
it's
yeah,
something.
it's a significant reduction. Just because when you don't have those fuel economy standards in place at the end of the decade, you know, once you get to price parity, you expect the market to pick up and more EV sales to occur. We're not at price parity yet. And then longer term, you want to see more of those stick approach if you're aiming to get more electric vehicle turnover.
All right.
Do we expect it to get to price parity?
Yeah, but
We were.
I think when you throw tariffs in there, I mean, our battery price survey that came out last year showed that global battery prices fell by about 20% to $115 per kilowatt hour. That's massive change. That's massive improvement. But with tariffs kind of in play, we'll see what next year brings.
All right, Corey, really appreciate it. Thank you so much. Corey Cantor, Bloomberg BNEF, lead U.S. EV analyst, and I really mean it. Their stuff is quoted everywhere. All right, in the markets, S&P is down by 0.4%. The NASDAQ up by 0.3%. What to do headed into the Fed? Dana Dioria is co-chief investment officer at Investnet, joining us now. Okay, you have on one hand Bank of America saying that cash levels are hitting a level where you may actually want to sell equities. T. Rowe Price saying you could hit 6% on the 10-year next year. What do you do?
Well, that certainly flies in the face of what we've been hearing for a long time, which is, you know, more consistent with a risk-on market, you know, consumer spending obviously doing well, you know, not a bad, nothing like a bleak picture for employment. But I think what's happening and what you're starting to hear and reference is things are getting ahead of themselves as they sometimes do, right? And you know, as good as it seems right now, and not a lot of reason to expect headwinds, the market is just pricing in good times at a faster rate maybe than what we think that we can actually sustain. And so, you know, value matters, price matters, and and you're seeing a little bit of that now, right? So maybe a little bit of a backpedaling there. But you know, I think the market has been and continues to be pricing in a very rosy scenario. And, you know, it's not that we're without reasons to think that that could tamp down. And one of them, of course, being that notwithstanding, you know, the rate cut this month, when are we going to get continued rate cuts? Are we going to have a pause as soon as January?
So from a positioning standpoint, Dana, is 25, the beginning of 25, look different for you guys than kind of maybe where you ended 2024?
I think 25, it's interesting because we sit at the nexus of a lot of different, you know, economic input from macro analysts and asset managers, et cetera. And it's interesting just to look across what you're starting to see come in around 2025 outlooks. Some of them are, you know, we're going to see some consolidation. A lot of it is we have a good reason to think that the good times keep rolling, at least in the beginning. You know, I think consensus sort of, at least the way I see it coalescing, is around we don't have a reason to expect some sort of, you know, big market correction early into 2025. But a lot has to pan out still, right? We have to understand how the new administration's policies are really going to be implemented. You know, is it going to be all the way to where maybe some of the rhetoric is, or is it going to be tamped down a lot when it's things like trade and tariffs? You know, what are we going to see in terms of bills that extend tax cuts, et cetera? So there's just a lot that has to be that is still unknown. But I don't think as you roll into 2025 you're going to get those answers that quickly.
So if you had to choose, what do you do with small caps versus mega cap tech? And I know that's not necessarily a fair comparison, but I'm basically talking about growth that's working, and that's been tech, versus small caps that are still waiting for that sustained bid.
It's such a good question. You know, I am a believer in valuation. I am a believer that no matter how good the outlook for, you know, the numerator, right, the cash flows, you really have to pay attention to the denominator and how much they're being discounted by. And, you know, we're just in another phase where mega cap and growth are running wild. And, you know, my instinct is to say, you got to at least diversify into other parts of the market. You got to make sure your portfolios, it has a robust keeping of, you know, and small caps stand to win, right? With a lot of the policies that potentially could be brought to bear. The tariffs, they're not hurt as much by that. Granted, if we have a little bit higher for longer, that's not as good for small caps. They're definitely more interest rate dependent. But they stand to benefit if it's a risk-on environment. And I lean toward, at the very least, have them in the portfolio. And frankly, if you can stomach short-term volatility, maybe even a little bit of an overweight, because over the long haul, they should outperform, especially small value stocks.
So, Dana, when you see a security, and I guess I'll call it a security here, like Bitcoin, effectively double almost since the election, what does that tell you about, I don't know, just the market, I guess?
So Bitcoin's a really interesting asset, right? Because, on the one hand, there's a whole element of it being potentially a currency, and, it's unfolding literally before our eyes whether, it can gain traction in that respect and what the next administration will do to make that happen. I think for most investors, though, it's really more obviously, is it a return enhancer for the portfolio? And you can gain access to Bitcoin from that perspective with a variety of ETFs now. We're seeing it right here on our own platform. This is not just, kind of investors on their own. You're actually seeing advisory assets entering this space, institutional assets enter this space. That tells me that, there's just more solidity underlying that. You have papers out there from big asset managers around utility functions with Bitcoin, and the fact that, for most people, because there's such an asymmetric payoff, it has sort of this lotto aspect to it. For a lot of people, some small slug of Bitcoin actually could make sense because the upside is much bigger than the downside. So I think you're seeing an institutional interest there that maybe wasn't there before. And you can get access if you want to participate. We're cautious about, how much you should put to something like that. It's very volatile, obviously. But if you want access, I think these ETFs that are backed up by big asset managers take the risk out of, the operational risk out of the position. You can do it.
It was interesting. Cameron Kreis writes Macro Man, a column every morning. And today, in his column, he said he really wants a reporter to ask Jay Powell tomorrow about the surge in fart coin and what that might say about financial markets and risk appetite. Bitcoin aside, it's a great point. When you have the mega cap growth at tech stocks, and then you have Fartcoin doing really well. All right, Dana, thanks a lot. Dana Dioria, she's joining us there, Co-Chief Investment Officer over at InvestNet. Now, the Fed's going to say they don't look at those kind of financial conditions, right? It's inflation and it's employment. But you look at different corners of the market, and you cannot argue with the animal spirit part. But is that okay as long as you have companies that are also rallying that have actual earnings growth and cash flow? I don't know.
Yeah, and it just, again, I view Bitcoin just personally, this is how I've come to view it, as a commodity, and it's supply and demand. And clearly, in that scenario, if you think about it as a commodity, demand higher than supply, but what causes demand to surge? Maybe it's simply the animal spirits being unleashed from the Trump election, and that's a great manifestation of it. Maybe that's all it is.
I mean, also it's just what people are willing to pay for, which is exactly what gold is. So anyway, coming up, we're going to have a very special interview for you. Senator Amy Klobuchar will be joining.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower across the board. Equities are being dragged down by tech stocks as traders weigh strong retail sales data this morning. We're also awaiting the Federal Reserve's rate decision and its forecast tomorrow. Of course, that happens 2 o'clock Wall Street time with Fed Chair Jay Powell's news conference, 2:30 p.m. Wall Street time. Here's where we stand. S&P down 18 at 6,055. Drop there of 0.3%. Dow Industrials slumping again, down for a ninth day, down 257, a decline now of just about 0.6%. The Nasdaq Composite Index down 33, a drop there of 0.2%. 10-year at 4.38%, with a 2-year 4.24%. Gold down $12 the ounce, down 0.5%, 26.40. West Texas Intermediate crude down 1.6%, 69.55 for a barrel of WTI. Bitcoin, meanwhile, closing in on $107,000, up now by 0.8%. Retail sales top forecast in November, and with that story, here's Bloomberg's Vinny Del Giudice.
Autos led the gain, sending total retail sales up 0.7% last month. Online sales also advanced amid Black Friday and Cyber Monday promotions. In all, 7 of the retail reports, 13 categories increased. The Commerce Department data come at the start of the Federal Reserve's 2-day policy meeting, which is expected to culminate in another rate cut. Vinny Del Giudice, Bloomberg Radio.
And among retailers today, Macy's down 1.1%, Walmart down 0.2%, Target shares are slumping 1.7%, and Amazon down now by 0.7%. And one other economic note: home builder sentiment rose for the next 6 months, rose to the highest in more than 2.5 years, on optimism that the upcoming Trump administration will help remove construction regulatory hurdles and boost sales. Among home builders, Toll down 1.5%, KB Home down 1.2%, and Pulte lower now by 0.4%. The union representing Starbucks baristas has voted to authorize a strike ahead of the final stages of bargaining over contract terms. Recapping, stocks lower, S&P down 18, down 0.4%, and for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pello, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, we're both live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. Just in about 2 minutes' time, we're going to bring you a conversation. Bloomberg Television anchor Kaylee Lyons is speaking with Senator Amy Klobuchar, Democrat from Minnesota. Get the latest of what's happening down there in D.C. as D.C. gets ready for another transfer of power. And with administration coming in, it's like one set of folks leave, and another set comes in, and it happens sometimes more smoothly than others, but hopefully this time will be much smoother.
And also what's happening in the rest of the world when it comes to politics, whether it's the tightrope that Justin Trudeau is now walking in Canada, whether it was the bizarre National Guard call out that we saw over in South Korea, whether it's France and the snap election that we saw. Well, I should say the prime minister getting the boot and then having to get a new one, and then the snap election we're going to see in Germany. It's quite a ride. And let's not forget, too, that all of this has ramifications on the dollar, which then has ramifications on other countries, particularly emerging markets. Brazil, for a 4th time in less than a week, intervening in the currency market earlier this morning to sell dollars to help fight against a weakening real.
Typically, that does not work, certainly not in the long term. I mean, unless you're, we've seen it from the Bank of Japan, we've seen it from the Central Bank of Brazil, but, I think just in past currency moves over even an intermediate term tends not to really be that effective.
Yeah, we have the bank sold about $845 million and $1.63 billion in 2 spot auctions. The latter was the largest since the pandemic. So at some point, it gets pretty dicey on that. Okay, well, let's take you now to D.C., where all the action will be happening over the 4 years, and how business leaders and M&A bankers and investors are going to be focusing on all the policy that's coming out. Bloomberg TV anchor Kaylee Lyons will be sitting down with Senator Amy Klobuchar. She is a Democrat from Minnesota. We'll talk about all the different details. Also, I think there's a budget that's coming at some point that we got to do. Kevin McCarthy was talking about how they're near a budget agreement. So we'll break all of that down for you. Let's go right now to Bloomberg Television, Kaylee Lyons.
I'd like to welcome our global Bloomberg television and radio audience as I'm joined in conversation by Democratic Senator Amy Klobuchar of Minnesota, live from Capitol Hill. Senator, thank you very much for being here. You are leading a subcommittee hearing today titled Continuing a Bipartisan Path Forward for Antitrust Enforcement and Reform. And I do wonder, in what will be come January, a Republican-controlled Congress in both chambers and White House, what that bipartisan path actually looks like.
Okay, well, first of all, thanks for having me on, Kaylee. It's great to be on. And I think what you've seen in this area of antitrust, you've seen some broad bipartisan agreement on a number of these cases, right? For instance, the Google case started under the Trump administration, the first Trump administration, as did the Facebook case that was at the FTC. Google was at the Justice Department. Then it proceeded through the Biden administration. Biden administration also brought some major cases, for instance, against Ticketmaster and other companies. And so you've seen a more aggressive antitrust enforcement over the last few years. Now you have new appointees going in place, and at least one of them I have heard the belief is over at the Justice Department with some former Democratic antitrust enforcers that she knows what she's doing. I'm looking forward to meeting with her, Gail Slater, and I'm hoping that we will continue those cases. I love competition.
Okay.
I like capitalism. That's why I'm for antitrust enforcement.
Well, you've mentioned Gail Slater. What about Andrew Ferguson? Do you think he loves the issue of competition in the same way that you do? Do you trust that the FTC will be in good hands under his leadership?
You know, I am looking forward to meeting with him. Interestingly enough, we do not confirm that position because he was already on the commission. Yeah. There is a new member that is being appointed on the Republican side. I'll note that he wrote a piece on the breakup of Ticketmaster in which he favored that. So I just think with antitrust, because at its core, it is about competition, and it's been laggard for many decades, and as a result, we're seeing more and more consolidation. It isn't that big companies are bad, it's that sometimes when you have no competition, then you start getting less innovation, more high prices, et cetera, et cetera. So I'm actually really excited about this. Senator Lee and I are doing this together, this hearing. Mm-hmm. Senator Grassley and I have passed our bill together, and I think you're going to continue to see interest in tech. In fact, Senator Cruz and I did a joint interview this morning, and a bill that we have gotten through the Senate on taking online porn off the internet. Different than antitrust. However, you're just going to continue to see bipartisan work on tech.
Well, I'm glad that you have brought up the Take It Down Act, which you co-sponsored with Senator Cruz. Is that trying to tackle symptoms of an underlying disease rather than the disease itself? And the disease I'm referring to here is unregulated artificial intelligence.
Thanks. I really would like to put in some rules of the road on AI, and this bill is actually broader than just AI pornographic pictures. It's actually also real pictures as well as AI-created ones. We're now seeing 1 in 12 Americans saying that they have been a victim or know someone that's a victim of this. We've had 20 suicides in 1 year of young kids. 20 suicides because someone, a girlfriend, boyfriend, someone they knew, put up their photo. They were embarrassed that their friends and their family would know, and they killed themselves. These are FBI statistics. So Senator Cruz and I came together. The bill does 2 things. One, make it clearly a crime to use pornographic imagery of someone else, whether it's AI created or real. And then number 2, that the platforms have to take it down. That's why it's called the Take It Down Act. They take down other violations of intellectual property, and the fact that people can be abused in this way to the point of committing suicide. And in one case that I know of, Senator Cruz's case, he actually had to call Snapchat to get the image down after months of this victim from his state dealing with it. That's just wrong.
Senator, I'd like to ask you about another one of your colleagues, your fellow Democrat. Senator Elizabeth Warren of Massachusetts wrote a letter, we understand, to President-elect Donald Trump asking for firm conflict of interest rules to be put into place related to Elon Musk, who, of course, has been tapped to co-lead this new Department of Government Efficiency. Have you had any conversations with Senator Warren about that, or at the very least, do you share in that sentiment?
Now, I haven't seen this letter, but I will say that I believe that we need conflict of interest rules in place for people who are making major decisions in the government. That is what our people have done voluntarily for years now. And you have a number of very wealthy people going into the Trump administration. There's been wealthy people as well under Democratic administrations, but you have a number of them coming in, and we need the conflict rules enforced. We need to know that the decisions they are making are not for their own interest, but for the interests of the American people. And I would hope that President-elect Trump agrees.
Finally, President-elect Trump yesterday met with the CEO of TikTok, Shou Chew, at Mar-a-Lago after saying in a news conference, Senator, that he has a warm spot in his heart for TikTok when asked if he would like to see the ban go through or will try to stop it. Given some of the issues we have already discussed around technology in particular and what is propagated on these platforms, what is your view about whether that ban should be enforced come January?
Of course, this came out of Congress with strong bipartisan support, and there are two avenues here. One is that they can follow the law and divest and find a buyer for the company. And the second is that they still are appealing to the Supreme Court. So my view has been that we should have rules of the road in place, by the way, for all platforms. I have been way out there, as I think you know, in terms of getting not just pornography off the internet, but other very, very difficult things that are on there right now, and that we should have a better policing of that, and people should have the right to protect their own intellectual properties, and also that we should have antitrust enforcement. You just can't have, say, Google with a 90% market share on the search engine and not have any competition, and then allow them to self-preference, as we see with Amazon and other companies, their own products at the top. That's why the NFIB, which is not a liberal organization, the National Federation of Independent Businesses, is strongly supporting the bill that I have with Senator Grassley, which simply puts some rules in the road in place for competition on the internet.
All right, Democratic Senator Amy Klobuchar of Minnesota joining us live from Capitol Hill on Bloomberg Television and Radio. Thank you so much, and I'll send it back to you in New York.
That was Kelly Lyons speaking with Amy Klobuchar, senator from Minnesota, talking about a different kind of regulation across the board. So let's stay in D.C. for a moment, because it is about the future of TikTok. Now, remember back in December 13th, there was a failure to convince the D.C. Circuit to halt a January 19th deadline to ban TikTok on a video sharing app. And then now what happens if TikTok goes to the Supreme Court and says, hey, will you also stay this ban while President Trump comes into office? So joining us now is Matthew Schettenhelm, media litigation analyst. Is TikTok having any luck with the Supreme Court?
Well, we're going to find out, Alex. So they made their filing with the Supreme Court later yesterday, and so it's now squarely before the Supreme Court. The request that TikTok is making is an emergency plea for a pause of that January 19th deadline to keep it from going into effect. And TikTok also says, oh, by the way, you should also grant review of this case and take it up and decide it yourself. And so that if the court were inclined to do that, I think you would likely see a pause of that January 19th date and a decision from the Supreme Court in June. But it's a big question whether the Supreme Court is actually willing to do that.
I mean, this ban takes effect January 19th. I mean, that's not that far away here. Do we think that they will even take up the case? Because, boy, we're getting close.
Yeah, absolutely. I mean, it's really right down to the wire here. I mean, a couple things to note. Issuing a stay is a heavy lift for the Supreme Court, and especially on a national security deadline like this. Congress decided, to set January 19th as the date on a bipartisan basis because of a national security risk. And unelected judges are a little hesitant to say, well, let's just delay that. There's going to be caution on the part of the Supreme Court to do that. What I think TikTok's filing does do, though, is it gives the court a way to do sort of a short-term delay, to push this into Trump's term by a couple days, sort of an administrative stay. To delay it by a couple days, but deny TikTok's broader request and say, look, the D.C. Circuit got it right. We agree we're not going to pause this whole deadline, but let's delay it by a couple days and push this into the Trump administration.
I mean, in some ways that seems fair because we don't know what Trump's position will be on it anyway. Do we have an idea of what it might be?
Well, yeah, Trump is really interesting on this topic since he was the first one in support of a ban during his last administration. But then just yesterday he echoed what he said more recently. He has a warm spot in his heart for TikTok because it helped him win the election. Now warm spots in the president's heart doesn't change a law on the books that says companies that host TikTok face liability of $5,000 per user starting on January 19th. So what he can do is try to approve some sort of divestiture. That's the idea behind the law. He could try to convince Congress to change this law. Or he could say, look, I'm not going to enforce this law. Companies facing that $5,000 per user, don't worry about it. I'm not going to come after you. So it's going to be really interesting if the Supreme Court refuses to issue this stay, whether Trump acts on that warm spot in his heart in some way.
Can he do that? And how would he do that? I thought the law is the law if the Supreme Court upholds it.
So we're in the unusual terrain here that Trump presents. Typically, the Department of Justice enforces laws that Congress passes, and so this squarely falls on the Department of Justice, which Trump controls to enforce. And so the big question in my mind, maybe Trump says, look, we're not going to enforce it, but if you're a company that's hosting TikTok and you're facing liability at $5,000 per every TikTok user that accesses the app, are you willing to take the chance that Trump doesn't change his mind? And so that's going to be a difficult question, I think, for some of those companies.
Well, that's quite interesting because the fines could be huge, right? So if I'm an app provider and I still have that on, what's my fine profile look like, and preventatively, how do they manage that?
Yeah, that's exactly right. So it's $5,000 per TikTok user, and there are 170 million TikTok users. So even if Trump doesn't take office until January 20th, so in theory this would take effect while Biden is still the president, assuming the Supreme Court doesn't do this short pause or short delay. So you can start doing that math of 5,000 times how many millions of users are accessing it. How big is the liability tab these companies are registering immediately if they don't do something? And that's why TikTok said, look, you need to give us, Supreme Court, at least give us 13 days for these companies to deal with this situation and start to take the app down to avoid that liability. So I do think Trump is going, it sounds like Trump's going to try to do something, but the law doesn't give him a lot of room to work here.
And the D.C. circuits, from what I understand, is a well-respected circuit, not one that I would think the Supreme Court would want to, disagree with. Is that correct?
I totally agree with that. And this decision was a unanimous decision. It was written by a Republican-appointed judge, joined by Naomi Rao, who is a Trump-appointed judge, and also joined by Sri Srinivasan, President Obama's appointed judge. And so I think when most of the conservative-leaning Supreme Court sees this D.C. Circuit decision, they're mostly going to agree with it. And maybe they could quibble over details and do things a little differently, but I think for the most part, they would be looking to concur with that decision. So I don't like TikTok's chances overall. It has a slightly better chance of winning a pause so that the Supreme Court can take up this case itself.
All right, Matthew, super appreciate it. Such good analysis. Matthew Schettenhelm joining us, Bloomberg Intelligence media litigation analyst. Well, this is it. We're like counting down now to the Fed. We're like T-minus 14 hours. You like that fast math?
I love that. It's going to be awesome. So we'll see. Again, the market's kind of discounting. If you look at the warp function, a 25 basis point cut tomorrow. But then after that, kind of the consensus breaks down about what we'll see and when we'll see, if there's any more.
Hawkish cut.
Yes.
That's what all the kids are talking about, hawkish cut.
Yep.
We'll see if we actually get that and then what it winds up meaning for the equity market. Equity market still trading a little heavy here. I'm taking a look at the S&P off by 0.3%, but off the lows. NASDAQ also off by 0.3. The Dow Jones Industrial Average off by about 0.5% as we head into the Fed tomorrow. A little bit of buying on the long end as well when it comes to the bond market. All right, coming up next, Balance of Power with Kaylee Lyons. She's coming up right after this global news update. Happy Tuesday, everybody.
is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. A new murder charge has been added in New York's Gilgo Beach case.
The defendant is now charged with the murder of 7 young women. They occurred between 1993 and 2010.
DA Raymond Tierney says a woman whose body was found in 2000 has been linked to defendant Rex Hoyerman, and the case could still expand.
We are not limiting this investigation to Gilgo Beach. We moved off of the beach.
The suspect has pleaded not guilty in earlier court appearances. Now to Madison, Wisconsin, where CBS's Ian Lee reports authorities are hunting for the motive behind the deadly school shooting.
Shock and sadness here in Madison, wondering how something like this could happen. I spoke with someone who's a teacher at a neighboring school. They said they just can't believe something like this happened. There's a lot of questions about how 15-year-old Natalie Rupnow got that gun, how she was able to do this. Also, a lot of questions about who these victims are. But, you know, the city right now is trying to put out resources for the community.
The Federal Trade Commission will soon require hotels, vacation rental platforms, and live event promoters to disclose any fees up front when they list prices. And as we hear from CBS's Allison Keyes, the government has a new rule designed to make airline travel easier for disabled passengers.
Democratic Illinois Senator Tammy Duckworth, a double amputee, says airlines cannot treat wheelchairs like random pieces of luggage.
They're my legs. They're extensions of our bodies.
Transportation Secretary Pete Buttigieg says airlines must offer prompt assistance to disabled passengers.
Like having a wheelchair available near the door when getting off the plane.
Airlines will also be required to quickly replace broken or lost equipment.
On the Health Watch, an Alabama woman's recovering after receiving a gene-edited pig kidney. CBS's Dr. John LaPook.
Interesting thing here is what they did is they fiddled with the genes, so there were like 10 gene edits that made the pig kidney more compatible with humans. They put it in, and it's working. It was 3 weeks ago yesterday, and it's working.
In most places, the entertainment retailer Sam Goody is long gone.
Sam Goody got it, Sam Goody. Sam Goody got it.
And now there's where the last 2 brick and mortar stores in the chain in Ohio and Oregon are going to close. A powerful magnitude 7.3 earthquake has struck just off the coast of the Pacific island Vanuatu. Closed-circuit cameras captured some of the widespread destruction. Injuries are reported. Wall Street, right now the Dow is down 193 points. This is CBS News.
BritBox.com.
There's new evidence the Supreme Court's ruling to end race-based admissions could be having an impact.
Enrollment data from the American Bar Association shows the number of black students entering Harvard Law School dropped sharply this fall to 19. That's about 3.4% of the total, making for the lowest number since the 1960s. Last year's class had 43 black students. Harvard has produced some of the country's best-known black lawyers, including former President Obama. Black enrollment dropped at the University of North Carolina as well, which was also named as a defendant in Supreme Court cases brought by the group Students for Fair Admissions. Deborah Rodriguez, CBS News.
Jill Biden says she's taught her last class at Northern Virginia Community College. The First Lady began teaching there in 2009 when her husband became vice president. I'm Steve Kathan, CBS News.
the world of politics to the world of business. This is Balance of Power. Live from Washington, D.C.
We're still waiting for the text of the government funding deal. Welcome to Balance of Power. I'm Kaylee Lyons in Washington. This is the Tuesday edition, which puts us just 4 days away from the deadline, where we risk a government shutdown that no one actually expects, assuming the stopgap measure can get the votes, but we have to see it first. We'll have analysis from Nathan Dean of Bloomberg Intelligence this hour, as well as our signature political panel that we always have on Balance of Power. It's Jeannie Shanzano and John Seaton today. Plus, after Donald Trump met with TikTok CEO at Mar-a-Lago yesterday, and TikTok asked the Supreme Court to put a stop to its ban that will start next month, at least for now, Emerson College has new polling out on voter sentiment around TikTok, and their polling director will be joining us this hour. Spencer Kimball will be with me in just a few moments. We begin, though, as always, with a check on financial markets from New York with Charlie Pellet. Hey, Charlie.
Hi, thank you very much, Kaylee Lyons. Good day from New York, and we got a lot of red on the screen on this Tuesday ahead of the Fed decision tomorrow. With the Dow, the S&P, NASDAQ all declining right now, right to the numbers. S&P down 23, down 0.4%. Traders weighing strong retail sales data this morning, also awaiting the Fed decision tomorrow. The Dow down 191, down 0.4%. The NASDAQ Composite Index right now down 87. That is a drop of 0.4%. 10-year 4.37%. The 2-year 4.23%. Spot gold now lower by $12 the ounce, down 0.5%. And West Texas Intermediate crude down 1.6%, $69.56 a barrel. Bitcoin at $106,777, up now by 0.7%. Minnesota Senator Amy Klobuchar says she would like to see some rules of the road on artificial intelligence. She was interviewed moments ago by our Kaylee Lyons, and she was asked about the Department of Government Efficiency and the work of the incoming efficiency czars, biotech entrepreneur Vivek Ramaswamy, and Tesla CEO Elon Musk.
You have a number of very wealthy people going into the Trump administration. There's been wealthy people as well under Democratic administrations, but you have a number of them coming in, and we need the conflict rules enforced. We need to know that the decisions they are making are not for their own interest, but for the interests of the American people, and I would hope that President-elect Trump agrees.
Minnesota Senator Amy Klobuchar interviewed right here on Bloomberg Radio. S&P down 21, drop there of 0.4%. As we mentioned, retail sales increased at a firm pace in November, bolstered by a surge in car purchases. Among retailers today, we now have Macy's trading higher by 0.5%. Walmart, little changed on the day, down less than 0.1%. Target down 1.8%. Amazon down 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington, and once again your host, here she is, Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Here in Washington, Congress is very close to wrapping up its work for the year, but there is still a massive item on its to-do list, and that is figure out how to keep the government funded past the deadline of midnight Friday. We have some clarity as to how exactly this could get done. It's going to be a stopgap measure that kicks the can down the road until March 14th. The problem is we haven't actually seen the text of it yet, and the clock is very quickly running out of ticks here. We heard from the Speaker of the House, Mike Johnson, about the plan earlier today. He said this.
I'm not going to get into much more detail because it's almost done, but we do expect text today. And we are going to try, let me answer your question in advance. We are, I believe, in the 72-hour rule. I've said that to all the House Republicans this morning. I believe we ought to try to pass this on a rule to go through regular process. We're committed to all of that. We're going to take care of these obligations and get this done.
Joining me now for more here in our Washington, D.C. studio is Nathan Dean, Bloomberg Intelligence Senior U.S. Policy Analyst. So he wants to follow standard procedure here, Nathan, and we know that that can take something that is really valuable when you're up against a deadline like this, and it's time. Are they going to have enough of it to do this before midnight Friday?
So I think they're going to have enough time to make lawmakers pass a bill, many of them reluctantly. I just don't think that they're going to have enough time to say give 72 hours for bill text and so forth like that. But look, this is a story that we've seen before. I mean, essentially, everybody says they want to get a deal done, and the negotiations are it's hard. Deal's not going to get done. Deal's not going to get done. It's going to get done. Oh, it's not. It's going to. But ultimately, a deal is going to get done because nobody wants a government shutdown right before President Trump takes over and before during the holidays. But when you said March 14th, that's a big red flag for the president, that's incoming president, because now you're going to have a government funding fight, or at least a discussion within the first 100 days of your presidency. And one of our predictions for 2025 is we may see a government shutdown. I'm not going to say it's going to happen in March, but the odds of a shutdown certainly go up in 2025 because both sides are going in feeling that they're pretty good about their positions.
I want to get more into that, but could you just quickly remind us what would happen just mechanically if for some reason the Senate hasn't had time to pass it and Joe Biden hasn't had time to sign it by midnight Friday, considering we'd be going into a weekend? What really would happen if there is a slight delay this time?
So actually not all that much. I mean, essentially for those people that are, we've had this before where there is a shutdown that happens on Friday and maybe the Senate doesn't get it done until Sunday. It's mechanically, I think a lot of the museums here in Washington would still remain open. I mean, it's just one of those things where they would use additional discussions and so forth to keep things flowing. But the big question is, can you get it open by Monday? If you weren't being able to get it up by Monday, the government would partially shut down. For those of us in the markets, it's really not all that big of a deal. Markets don't really care about shutdowns. But if you're looking for some data that's coming out, say, from the Bureau of Labor Statistics next week, that would be the biggest issue for a government shutdown for next week.
All right, so let's get into next year now. As you say, 2025 could get maybe possibly messy very quickly, or at the very least, it's going to be a crowded legislative agenda, which always is potentially breeding ground for chaos, because it's not just now trying to figure out the appropriations bills for the fiscal year that would have started 6 months beforehand by March. You also are going to try to push through a reconciliation package, maybe two, with Trump's high-profile agenda items from the border to taxes. You have to deal with the debt ceiling. I mean, just from a logistics standpoint, how is all of this going to get done so quickly?
So this is where there's a lot of optimism in Washington, but this is where we also tell our clients, just remember, Washington doesn't move fast. I mean, especially when there's nothing holding their feet to the fire. So let's look at the beginning of next year. President Trump, day one, a lot of executive orders. But the Congress is going to be trying to confirm a lot of those nominees. 53 to 47, the Republicans have control. But over on the House, like you said, with this tax policy debate that's happening with reconciliation, you may be at this point only 217 to 215, two Republican members away from losing the majority of the House. So where I'm going with this is that there's a lot of things they want to do. Reconciliation bill, crypto bill, debt ceiling, and so forth like that. But what we're telling our clients is unless there's something that something has to happen by this date or something bad happens, Congress can always push it and delay it even further. So we don't think a crypto bill will get done until next summer. We don't think tax extensions will probably take up until the second half of next year, maybe beginning July and so forth like that. Border reconciliation bill could move a little bit quicker. But ultimately, there's a lot of optimism in Washington right now. Things are going to slow down once the process begins. Don't be surprised if they don't move as quickly.
Well, I'm glad you brought up potential crypto legislation, because on this program yesterday, I got to talk to the incoming chair of the House Financial Services Committee, French Hill, about what that legislation could look like in the 119th Congress. This is what he told me.
We can take the lessons that we learned in the 118th Congress by producing FIT, which was a bill that got 71 Democratic votes here in the House, and the work that Chairman McHenry did with Ranking Member Maxine Waters on a stablecoin bill. Both those will be priorities coming into the new Congress.
So when we consider FIT 21, which already passed the House, why not just have the Senate then pick that up? Why is it that you think actually getting crypto legislation through both chambers will take a little while?
Well, so this is where I think it's going to take time, because even though Representative Scalise told Representative Hill that they would have a vote within the first 100 days, the cryptocurrency now has an ally at the White House. They're in charge. And the FIT 21 was a bill that was designed to entice Democrats to come with. Now, don't get me wrong, you are going to need Democrats to come with because you are going to have to get this past a filibuster in the Senate. But for FIT 21, SEC gets authority over securities, CFTC gets authority over commodities. But when the devil gets into the details, the crypto industry may want to start changing a little bit of it. And all I think is that they're going to need a couple months to figure that out. I certainly think it's going to get done in the first half of next year. We're not looking at something that's going to take that long, but I just don't be surprised if it doesn't happen in like day 30, like a lot of folks think it is.
I want to ask you about something else that's not going to happen in the next few days before the Senate leaves town, and that is advancing the nomination of Caroline Crenshaw as an SEC commissioner. She, of course, is one of the Democrats. Crypto doesn't like her very much, and now apparently the Banking Committee is abandoning its effort to try to push that through before the end of this Congress. How important is that, Nathan?
So, the SEC ultimately in the first half of next year will have 3 Republicans to 0 Democrats. Now, historically, you need 3 Republicans, 2 Democrats, or whoever party controls. Now, operationally, this isn't going to change things all that much. The party that's in charge, they can push rules through, so forth. But it does take away a dissenting voice from these meetings and from these debates and so forth like that. And I think not only into the crypto space, but Commissioner Crenshaw was very, very much proactive in climate issues. And so I think the climate industry in particular is going to lose an ally as well. And we'll just have to wait and see who the Democrats in the Senate nominate for her replacement.
So those climate disclosure rules the SEC was very proud of passing under the Gensler regime, what happens to them?
So I think, our take is that they're going to get overturned in the courts. Obviously, the SEC has the ability to pull that back. But I would just note that it's much, I would say if you're an opponent of this rule, it's much better to have the courts strike it down than to pull it back, because then you can't just go back and reinstate it again.
Okay, so we've covered a lot of ground here. If we circle back, though, to the funding conversation that we began this with and the March 14th deadline we're now going to be dealing with for appropriations, given the proximity of March 14th to the month of April in which sequestration under the debt ceiling deal of last year will kick in, how much more leverage does that give to the Republicans who will say, look, if you don't vote for this, we're going to have these automatic cuts across the board, which no one really seems to want.
Yeah, so I don't think there's going to be much of a government funding fight in March. I think the Democrats are still trying to figure out from the election what their position is going forward. So I think you'll see a kick the can, so to speak, into September. That September 2025 debate, though, this is where if the DOGE committee comes through and says, look, we want to start defunding the Department of Education, we want to delete the CFPB and so forth. I think I could see a scenario where the Democrats come back and say, we're going to fight for what we believe in, and if you shut the government down, it's on you, President Trump.
All right, Nathan Dean of Bloomberg Intelligence, where he is senior U.S. policy analyst, always in tune with what's happening on Capitol Hill, or maybe more specifically, what isn't happening or what is hard to happen. Thank you for joining us here on Balance of Power on Bloomberg Radio. Again, we still have not seen the text of this bill, and the timing here is tricky if Speaker Johnson does want to stick to that 72-hour rule. We'll have more ahead on this program. Our political panel will be joining us, Jeannie Shanzano and John Seaton today. But still ahead, we're going to bring you some new polling just out today from Emerson College. It's a national poll, looks at a number of issues, including one we heard a lot about yesterday, TikTok and the prospects of a ban that could go into place one day before Trump's inauguration. That would be January 19th. We'll get into that with Spencer Kimball of Emerson in just a few moments. So stick with us here on Balance of Power on Bloomberg Radio.
12:21 on Wall Street, and we do check markets all day long here at Bloomberg. We begin with the developing story. Honda and Nissan both higher on a report that the companies are to begin merger talks. That word from the Nikkei news agency. Right now we've got ADRs of Honda Motor Corp up by 2%. ADRs of Nissan, they're up now by 6%. U.S. stocks trading lower across the board. The Dow, the S&P, NASDAQ, all in the red. The S&P down 23, drop right now of 0.4%. The Dow down 243, down 0.6%. NASDAQ down 70, a decline of 0.4%. 10-year yield 4.37%. The 2-year 4.23%. Gold down $10 the ounce, 26.42, drop there of 0.4%. And West Texas Intermediate crude down 1.4%, 69.70 for a barrel of WTI. Pfizer is forecasting 2025 sales and earnings in line with analyst projections, a step toward fending off an activist investor's claims that the drug maker is being mismanaged. On a down day for the rest of the market, Pfizer higher by 4.3%. S&P down 0.4%, the Dow down 0.6%, NASDAQ down 0.3%. Again, the 10-year 4.37%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellets. Balance of Power continues now. Back we go to Washington, and once again, your host, here she is, Kaylee Lyons.
All right, Charlie Pellet, thank you so much. This is indeed the Tuesday edition of Balance of Power, which comes to air after what was an incredibly busy Monday, where we got a lot of news pertaining to one subject in particular, and that is the looming ban of TikTok in the United States. It's, of course, supposed to go into effect on January 19th if they don't divest their U.S. operations. This is actually happening because of bipartisan legislation that passed through both chambers of Congress and was signed into law by President Biden last year. But, of course, a new president is coming in. And we learned yesterday that the CEO of TikTok, Shou Chew, met with Donald Trump, the president-elect, at Mar-a-Lago. This is after TikTok asked the Supreme Court to intervene to stop the ban, at least for now, and after we heard Trump earlier in the day in a news conference at Mar-a-Lago talking about his feelings about the platform.
We'll take a look at TikTok. You know, I have a warm spot in my heart for TikTok because I won youth by 34 points. And there are those that say that TikTok has something to do with it. TikTok had an impact, and so we're taking a look at it.
Now, Emerson College is out with some new polling around TikTok, and that maybe does support the idea of youth wanting it to stick around. Half of voters under 30, according to Emerson's data, oppose this ban. So joining me now for more is Spencer Kimball. He is the director of the Emerson College Polling Center. Thanks for being here on Balance of Power. Spencer, I would imagine that there is a pretty large student population at Emerson that is on TikTok. So what do we need to know about the correlation between support of this looming ban and age here?
And I think, Kaylee, that's the most important, is that there is a generational divide that we're seeing on this issue and other issues, but particularly when it comes to TikTok, that 18 to 29, and even though they're not in our survey, those under 18 are also using TikTok, and they would prefer to keep it. What we also find is that the minority population, particularly Black voters, 2 to 1 want to keep TikTok, about 54%. So it's interesting to see the political wins and the dynamics in play here on this issue.
Yeah. Well, and this isn't the only issue centered around kind of technology adoption and feeling around technology that does have these kind of distinctions, not just in terms of age, but also the other demographics you were pointing to, like minorities. You find kind of similar patterns when it comes to crypto, for example.
Yeah, exactly. In this survey, as we were looking at the data, I was thinking of my students, and I'm like, wow, the student population here, it's a lot different than the rest of us in our 30s or 40s or 50s, and then us in our 60s and 70s. You know, we really have different attitudes about cryptocurrency. We have different attitudes about TikTok. So these 18 to 29-year-olds, they're finding themselves as in a minority. So even on cryptocurrency, that's something that's really popular with about 18 to 49-year-olds. 18 to 39 is the sweet spot, but up to those 49-year-olds, they're still involved in it. But it's the minorities. They're 2 to 1 more likely to be involved in cryptocurrency than the white voter. And so we see here an opportunity in the economy for these younger voters that they see crypto as kind of their key to success. And that's also changing the political realignment of these voters, where they were really strong Democratic voters. And now 57% of those invested in crypto have a favorable opinion of Donald Trump. So what you're seeing is that swing of the vote, and we saw that play out in the election as well.
Yeah, we certainly did, and not just the presidential one, but down the ballot as well. When we look at some of the congressional and Senate races in which there was a lot of crypto money at play. You alluded to, though, Spencer, this notion that for at least some group of the population, this is an economic issue, but there are also wider economic issues that would affect American consumers pretty much across the board at play now in the second Trump administration, including that of tariffs. I know you did some polling on that as well. Donald Trump had made no secret of his feelings around this and his support of more protectionist ideas on the campaign trail, and he won. But does the data suggest that really voters are feeling that protectionist, that supportive of tariffs?
Yeah, the voters are leaning on the side that the tariffs are going to hurt. About 50% think it's going to hurt. A little under 40% think it's going to be helpful. It's driven mostly on this by political ideology. So Republicans think that the tariffs are going to be helpful, about 55%. Democrats, 71% say no, they're going to hurt the economy. And the independents align with the Democrats on this issue. About 57% think it'll also hurt the economy. So that one's really being driven by political ideology, while we're seeing more of that age and generational divide on those other issues of crypto and TikTok.
Well, as we consider political ideology here and the president that is coming into the White House being very different in terms of ideology than the president who is outgoing, Joe Biden. There's just, 34 days left of Biden's presidency here. He's trying very hard to shape his legacy, in part on the economy, but everything else as well. How are people feeling about him, knowing that he's about to vacate the office?
They're kind of at the lowest point in their feeling for Joe Biden in our polling over the last 4 years. His approval rating's around 36%, disapproval about 54%, which are kind of the low and the high that we've seen over this administration. So it's right now kind of a down note. And then on top of it, that core constituency of younger voters, they're going to be upset with TikTok because he's kind of holding the bag, as you mentioned. It's on the 19th that this goes into effect. But Trump comes in on the 20th, so this could also impact his legacy with these younger voters who don't think, who want to keep TikTok and might blame the president if it gets taken away.
Is part of the reason, Spencer, before we let you go, that his approval is so low right now because of his pardon of his son Hunter?
Yeah, the pardon was not popular either. 52% said they shouldn't have done that. About 30% were okay with it. So that's not a policy. Some of the pardons have kind of piled up on him in a more negative way. Also, I think, it's the end of the term, and what is going to be his lasting legacy? And we're going to have to wait to see. But right now, he's in a bit of turmoil in this administration as he's leaving office.
He certainly is. All right, Spencer Kimball of Emerson College bringing us the new data from Emerson's polling center, where he is the director. Thanks for being here on Balance of Power. As we consider Biden's legacy, of course, in part, he wants to cement his economic legacy, but he has made it very clear he would also like his legacy to include the reaching of a ceasefire agreement between Israel and Hamas in Gaza before he leaves office. And we have had some development in that regard today, as Israeli officials are suggesting a ceasefire is now more likely than at any other time in the past year. So we want to get some more detail now with Ethan Bronner, who is Bloomberg's Israel bureau chief. Ethan, I feel like we have had a lot of head fakes with a ceasefire agreement between Israel and Hamas. Does this one feel different? Could this really happen?
Hi, Kaylee. That's a great question. I think the reason I wrote the story is that there's enough of a sense that it is different, that it was worth putting it out there. It looks different. It's rare to have so many senior Israeli officials out loud and also quietly saying that they're feeling confident. Now, part of I think the change is that Hamas is in such a weak position compared to what it was 3 or 4 months ago after Hezbollah was taken out, after Hamas's leadership was killed, and so on. And Iran is not in the strength that it was, and Syria has imploded. So those are sort of the reasons that they feel confident. Whether Hamas is actually going to make the deal that they hope, it's a little still unclear to me.
Well, so does it still have the same sticking points that we understand have prevented an agreement from being reached for the last many, many months that these talks have been ongoing? There is a fundamental difference in what Israel thinks this day after looks like compared to what Hamas wants, right?
That's right. I mean, I think that it isn't even entirely about so-called day after. It is that from the beginning, Israel has said, when this is over, there will be no Hamas doing anything in Gaza. It will not rule. It will not have any guns. Done. Finished. We're going to destroy it. And Hamas saying, you know, we're here to stay. So that gap remains. The question is, can they create a deal which goes in stages so that the first stage for it to be accomplished doesn't require an agreement on the final stage? And that seems to be what they're negotiating now, and perhaps it can work.
And at what stage would we anticipate that the remaining hostages still being held by Hamas would be released? How many of them are there, frankly, that Israeli intelligence believes are alive?
We think of the 100, about half are alive. So that's 50 people or so. That's not nothing. And the argument has always been, the Israelis have tried to front load the number let out in the first phase. And Hamas has tried to hold on to some. So the question of, say, who is a so-called humanitarian case? Is a girl soldier, a young woman soldier, considered a humanitarian case? Or, as Hamas says, no, that person is a member of the military. So those are the, and then there's who's going to be released from the Israeli prisons among Palestinians, and that sort of thing. So there are things that they are negotiating, but, you know, that core disagreement, it's possible that they can find a way around it. It's not completely clear to me how.
We just have a minute left here, Ethan, but would you be surprised if they do find a way before Donald Trump takes office? Are you surprised by the timing here?
No, I mean, I think that, well, from what I've been able to understand from Israeli officials, it's going to start in the Biden administration, but it will have to continue in the Trump administration, because we're looking at a 6 to 7 week pause in fighting, and of course there are only 30-40 days left in this administration. So I think it's going to be a bridge between the two.
All right, that's a very good point. This is something that Trump will still have to be dealing with when he takes office. Ethan Bronner, our Israel bureau chief, thank you for your insights and great reporting as we do consider the prospect of a ceasefire being maybe closer than it has been to this point. That is just one geopolitical development we're paying attention to today. The other involves the ongoing war between Russia and Ukraine, as Ukraine is believed to have been behind the assassination of the head of Russia's radiological, chemical, and biological defense forces in a bomb explosion in Moscow earlier today. This is according to people familiar with the operation, and it's an incredible development to see as we consider the future of that conflict as well under a second Trump administration. As Donald Trump made it clear in his news conference at Mar-a-Lago yesterday, he would like to see a deal done to end this war. We'll have much more still ahead on the incoming administration on balance of power. We'll turn next to our political panel. Jeannie Shanzano and John Seaton will be with me in just a few moments, so stick with us right here on Bloomberg Radio.
12:40 on Wall Street. We do check markets all day long here at Bloomberg, and a developing story at this hour. Honda Motor and Nissan Motor said to be preparing to start negotiations on a possible merger, which could ultimately be expanded to include Mitsubishi Motors. This according to Japan's Nikkei. Nikkei says the two major Japanese car makers do plan to sign a memorandum of understanding to discuss shared equity stakes in a new holding company under which the combined company would operate. Right now, we've got ADRs of Honda. They're up by 1.7%. ADRs of Nissan surging now by 9.2%. Stocks lower across the board ahead of the Fed decision tomorrow. S&P right now down 19, drop there of 0.3%. The Dow extending its decline to a ninth session, down 238 points, down 0.6%. Longest drop for the Dow, by the way, since 1978. Nasdaq down 46, a decline right now of 0.2%. 10-year 4.38%, the 2-year 4.24%. Gold down $9 the ounce, down 0.4%. West Texas Intermediate crude down 1.3%, below $70 a barrel, and Bitcoin now up 1.2%, back above 107,000, I should say, to be clear, 107,000 on Bitcoin, 351. Industrial production down for the third month in a row. And with that story, here's Bloomberg's Vinny Del Giudice.
Factory output barely budged last month based on the Federal Reserve data. Output in mines and utilities dropped. American factories have been struggling due to limited business investment and high interest rates. Hurricanes, as well as the extended Boeing aircraft strike, also took a toll. Looking ahead, sluggish exports and the strong dollar pose fresh risks for 2025. Vinny Del Giudice, Bloomberg Radio.
And another economic report this morning. Homebuilder sentiment for the next 6 months rose to the highest in more than 2.5 years, on optimism that the incoming Trump administration will help remove construction regulatory hurdles and boost sales among homebuilders. Toll down 1.3%. KB Home also down 1.3%. Pulte down by 0.6%. Recapping Bitcoin, $107,400. S&P down 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And that's a Bloomberg Business Flash.
All right, Charlie Pellet with a look at the markets from New York. I'm Kaylee Lyons. This is Balance of Power on Bloomberg Radio, live from Washington. Thanks for being here on this Tuesday edition. But I actually want to start our next segment with our political panel by talking about something that happened in New York yesterday. And that is the judge in Trump's hush money case, in which he was convicted of 34 felony counts of falsifying business records, ruling last night that that conviction should not be tossed out because of the Supreme Court's ruling from earlier this year on presidential immunity. That's a rejection of one of what is a number of avenues that Trump's legal team has been pursuing to try to get this conviction tossed. And Trump, perhaps no surprise, has a pretty strong reaction to it, posted today on True Social, which reads in part, quote, "In a completely illegal, psychotic order, the deeply conflicted, corrupt, biased, and incompetent acting Justice Juan Merchan has completely disrespected the United States Supreme Court and its historic decision on immunity." Now, of course, Bloomberg has no reporting to indicate that Merchan was conflicted or corrupt during these proceedings, but nonetheless, given this is the president-elect we are talking about, we wanted to get the reaction of our panel today. Jeannie Sheehan Zaino is with me. She is Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress, alongside Republican strategist John Seaton, who is founder and CEO of Echo Canyon Consulting. Thanks to you both for being here. Jeannie, I'll begin with you. Given the fact that his sentencing has been postponed in this case until, at the very least, after he's no longer in office, does this even matter at the end of the day?
It does matter. It matters for history. I mean, as I've said many times, I did not think that Bragg should have brought these charges, but he did, and a jury convicted President Trump. And what Judge Merchan was asked to do last night was to interpret a very, very vague ruling by the U.S. Supreme Court in Trump v. U.S., where they said for the first time in American history that any actions you take in the official role, you are immune. And so judges across the country, when these cases come, if they do, are going to be charged with saying what is official and what is not. And Judge Merchan said, and I think rightly so, that even though these conversations took place in the White House and involved White House staff, They did not involve a subject in his official capacity as president. Those were the payoffs. And so the evidence comes in and his conviction stands. Again, I didn't think the case should be brought in the first place, but his ruling last night on this was sound.
Well, so as we consider what could happen to people like Juan Merchan or others, John, who have gone against the desires of the president-elect or have investigated him or what have you, we've obviously heard a lot about retribution. Do you think people like Juan Merchan or Alvin Bragg, people who have brought these cases against Donald Trump, do have concern or the right to be concerned about what could happen to them legally under the second administration?
You know, I really don't, and I think that you know, this is certainly not the first time that the president-elect has made kind of brash comments like this. But if you look at his first term, you know, this was not a cornerstone of what he did when he was in office last time. I expect that he is very focused on securing the border. I expect he is very focused on doing what he can to bring down prices in foreign trade, in foreign policy. So no, I don't think this is high on his list. It's one thing to put something out on social media, quite something different to actually have a kind of coordinated campaign of revenge or anything like that. I don't think that they have anything to worry about.
Well, John, I'm glad you raised the border and immigration, as we do understand that is one of the first things he wants to address when taking office just about a month from now. And Bloomberg reported, our colleague Eric Martin reported yesterday, that the Trump transition team has been reaching out to the governments of Mexico and El Salvador through back channels, talking with them about basically taking back some of the undocumented migrants that, of course, he has been very outspoken about deporting from the United States. Given that we do have the track record of his first term to compare to, how successful do you think these efforts ultimately will be when it comes to deportations?
Well, I certainly think that there's one area where the vast majority of the American people agree, and I think it only makes common sense that anyone who is here illegally, who is here undocumented, who is a criminal, who has committed crimes in this country, shouldn't be here anymore. And I think that that is going to be the first priority of this administration, is to make sure that anyone who is threatening the safety of the American people, who isn't documented, who should not be here, is sent back to their country of origin. And I am not at all surprised that he's taking early steps to work with the governments of Mexico, El Salvador, and elsewhere to try to make sure that the first group of people who don't belong in this country, who should not be here, are sent back. After that, I think it's going to be a much taller task, if you will. I know he feels like he has the support of the American people to do a much more broad deportation program. But I think starting with the group that everyone agrees shouldn't be here, criminals who are here illegally, that seems to be a no-brainer and something that I expect the president-elect to work on very quickly once he's taken office.
Yeah, we'll see if this is a promise that is indeed kept, as he has pledged to. I want to talk about another promise that was just made yesterday, Jeannie, that it does seem he has indeed kept. At his press conference in Mar-a-Lago yesterday, he talked about the idea of suing the Des Moines Register and pollster Ann Seltzer over the poll that, of course, came out right on the eve of the election that actually showed Kamala Harris up against Trump in Iowa. And today that lawsuit has indeed dropped. Ann Seltzer, the Des Moines Register, and the newspaper's parent company, Gannett, all being sued by Donald Trump with the accusation of fraud and what he says was brazen election interference. You yourself, Jeannie, obviously are an experienced pollster. So what do you make of this news?
You know, we are just in another world. When he was asked in the press conference yesterday, he was asked about the decision by ABC, the $15 million deal. And that's when he brought up the Ann Seltzer of it all and then the Des Moines Register. And we talked about that poll. It kept us all busy for a few days before the election, and it was dead wrong. There's no question there. That said, it's a far cry from being dead wrong on the data from a poll and being charged with and found guilty of or had to pay for libel. And so I think he has been emboldened by this decision by ABC to make this $15 million payoff. He is the embodiment of a public figure. And in this country, under New York Times versus Sullivan, for many, many decades, it has been very, very tough to file these kinds of lawsuits if you are a public figure. And yet Donald Trump and his allies keep talking about this. And, it was interesting. He not only talked about Ann Seltzer, the Des Moines Register, he said he was even going to go back and try to get the Pulitzers taken back from those journalists who won them regard to what he calls the Russia hoax. So, he is going to go full steam ahead, no question. This is what he does all the time. But it's going to be a question of, do our courts stand up for how we have always defined libel in this case? And do journalists continue to do their job and not be scared to report because they are worried that they are going to be sued? These are big concerns because, of course, democracy does die when we don't have a free press.
Well, and I also wonder, John, considering that he did win this election, despite all of the reporting that he views as or having been unfavorable to him, is this really a productive course of action when he has such a long list of things that he would like to accomplish very early in his term?
I'm not going to speak to whether it's productive. He can, as we know in this country, you can sue whoever you want, whenever you want. So it's certainly within his rights to do so. And look, I'm certain my colleague on the Democratic side has also fallen victim to seeing some polling on races that we've worked on that were not quite accurate and ended up, maybe shifting public opinion. So it happens, and there's not a whole lot you can do about it. I am hopeful that as the polling industry continues to look at changes in how people answer questions, in how we weight different surveys and things like that, that the Seltzer survey is kind of a warning sign that when something is way outside of what expectations are, we at least take a really good hard look and make sure that the polling we're putting out is accurate, because it does have an impact on public opinion, and it's important to be as close as possible.
All right, I want to shift gears to another topic here, because we had Senator Elizabeth Warren in the news today that she sent a letter to President-elect Donald Trump about Elon Musk and wanting to make sure that there are ironclad conflict of interest rules written as he gets ready to have this advisory role that arguably he already has in the transition, but in this administration. And I actually spoke with one of Warren's colleagues, Democratic Senator Amy Klobuchar of Minnesota, about this earlier today on Bloomberg TV and radio. And this is what she told me.
I believe that we need conflict of interest rules in place for people who are making major decisions in the government. That is what our people have done voluntarily for years now. And you have a number of very wealthy people going into the Trump administration. There's been wealthy people as well under Democratic administrations, but you have a number of them coming in, and we need the conflict rules enforced. We need to know that the decisions they are making are not for their own interest, but for the interests of the American people.
Jeannie, do you think we're going to get those conflict of interest rules?
Gosh, I hope so. This is a long time coming. I keep talking about this, the Musk aspect of this, but she's absolutely right. It's on the Democrat, it's on the Republican side. Quite frankly, it's also in Congress. We do need conflict of interest rules. You just look at Elon Musk. He got many billions of dollars last year alone in contracts. It was almost like $15.5 billion. And now he is charged with trying to cut back and make the government more efficient, which gives him a say over those very agencies who are awarding contracts and who are investigating him. And so that is enormous power and an enormous problem. We heard this from Bernie Sanders over the weekend on Meet the Press. Your interview with Amy Klobuchar is she is dead on with this. We do need conflict of interest rules. Am I hopeful we'll get them, though? I'm not terribly hopeful because, of course, what day is it? And we still don't have the government funded. But, I will try to be optimistic on this one.
Very good point. We'll have more on government funding in the next hour of Balance of Power. Just quickly, though, John, we have a minute left. What's your thought on Mr. Musk?
Well, I think that he is an incredibly innovative person. He's obviously brilliant, and as was noted, he does have billions of dollars in government contracts awarded under a Democratic administration. So I think there's one thing about Elon Musk, that he is always looking for ways to make things more efficient and improve upon processes that are already in place. I'm really excited to see what he comes back with, what recommendations he makes, and whether he can, in fact, get the government working more efficiently and better for the American people.
All right, John Seaton and Jeannie Shanzano, our political panel today, will be sticking with me, because before Congress can get to work on the recommendations of the DOJ, they have to figure out funding for the government by midnight on Friday, and we still don't have the text of that legislation that will kick the can down the road until March. So we'll get more into the funding battle in this next hour of Balance of Power. Much more is still ahead. I'll be joined live from Capitol Hill with Republican Congresswoman Nicole Malliotakis of New York, who will join me not just on funding now, but questions around 2025 and tax reform, and specifically what happens to the SALT cap. Might weigh in on the drones everyone's been seeing in the Northeast as well. It's all ahead in the second hour of Balance of Power right here on Bloomberg Radio.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
Well, I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Stack very much in the red. This is the 9th down day in a row for the Dow Jones Industrial Average. Right now we have got the Dow down 262, down 0.6%. Longest losing streak since 1978. The Dow S&P right now down 21, decline there of 0.4%, while NASDAQ is down 50. For the NASDAQ Composite Index, a drop right now of just about 0.3%. The 10-year ahead of the Fed decision tomorrow, 4.37%. We have got the 2-year, 4.23%. Gold right now down $7 the ounce. Spot gold, $26.45 the ounce, down 0.3%. West Texas Intermediate crude down 1.2%. Right now, WTI $69.89 a barrel, and Bitcoin up 1.3%, 107,475 now on Bitcoin. Retail sales increased at a firm pace in November, bolstered by a surge in car purchases and solid online shopping that masked more mixed spending elsewhere. Those numbers from the Census Bureau today among retailers. We got Macy's up almost 2% now, Walmart up by 0.2%, Target shares down 1.7%, and Amazon lower by 0.6%. Honda and Nissan said to be preparing to start negotiations on a possible merger, which could ultimately be expanded to include Mitsubishi, that according to Japan's Nikkei. Right now we've got ADRs of Honda up 1.6%, Nissan up now by 11.1%. Balance of Power continues. Back we go to Washington. Once again, your host, here she is, Kaylee Limes.
All right, Charlie Pellet with a look at the Tuesday trade. Thank you so much. Meantime, here in Washington, it's not just any Tuesday. It's the last Tuesday of the 118th Congress being in session. It also happens to be the Tuesday before a Friday at midnight deadline for government funding authority to run out. No one in Washington really believes there will be a shutdown, but the problem is the way of averting it, a continuing resolution that will kick the can down the road until mid-March, hasn't actually been revealed to us yet. We understand there's a deal in place, but there's no text, and lawmakers technically are supposed to be allowed a lot of time to read the text before they vote. So we wanted to get into this now with Megan Scully, who leads our Capital Influence team here in Washington. She's here with me in our DC studio. So, Megan, I guess the first question is, what is taking so long when everybody knew this December 20th deadline was coming up on December 20th?
So this is the last train out of the station before the end of the year, as you said. And I'll just preface or add to what you said earlier. We hope this is the last Tuesday of the 118th Congress. They're trying to basically attach things to it. Agriculture money, disaster aid, everybody has their item that they want to get in this bill. And from what we understand, that last holdup is the ag funding, but there are always, as long as it's open, lawmakers see an opportunity to press their case for their own pet rock. So, there is no deal until we actually see text.
Well, so we haven't seen the text yet. We did, though, hear from the Speaker, Mike Johnson, at a news conference this morning, and this is what he had to say about timing.
I'm not going to get into much more detail because it's almost done, but we do expect text today. And we are going to try, let me answer your question in advance. I believe in the 72-hour rule. I've said that to all the House Republicans this morning. I believe we ought to try to pass this on a rule to go through regular process. We're committed to all of that. We're going to take care of these obligations and get this done.
Megan, 72 hours at this point doesn't leave a lot of hours left for the Senate before midnight Friday. Are they going to have to waive it?
They very well might. Now, what we're seeing Mike Johnson do here is, really try to navigate this majority, which is only going to be smaller in the next Congress. So if he waives the 72-hour rule, which is not a hard and fast rule, but it is a courtesy to the members. Like, okay, we're going to give you time to do this. It's going to go through all the normal procedures to get to the floor. That does bring us to Friday. And then the Senate does its Senate thing, and we could have, someone like Rand Paul object and then force that to go several days. What we do know is that, and I've said before, jet fumes, especially around the holidays, is the most powerful motivator on Capitol Hill. So we could see something like Johnson says, we're going to stick by the 72-hour rule, and the Freedom Caucus says, no, that's okay. We need to go home and do our last-minute shopping. So, and this could all speed up come Wednesday or Thursday. But, they've got to get that text out. Until that text is out, it all remains open.
There's also the consideration that even if this goes slightly past the midnight Friday deadline, that brings us into a weekend. So the actual effects of what would be a shutdown technically wouldn't necessarily be felt that much in reality, right?
Right. It would be essentially a technical shutdown. There are some still consequences of that. Guard units, for instance, that are on training are scheduled for weekend duty, may or may not be affected. You have government civilians who are on travel, who may be affected. So, the effects of it are much smaller than on a Monday.
I want to ask you one more question on development we saw on the Hill today, and it's actually in the Democratic caucus, where we have been talking for the last several weeks about kind of this generational shift we're taking place in terms of, or we're seeing take place in terms of who's going to be the ranking member on a lot of powerful committees. And there was a battle over oversight specifically, where it was the 35-year-old Alexandria Ocasio-Cortez up against 74-year-old Jerry Connolly, and Connolly is the one that won. Is this because of Nancy Pelosi, or is this just because AOC is a little bit too young, even in the middle of a generational shift?
I think this committee is going to be, sort of a crucible committee during the Trump administration, and Democrats are really going to try to use their stance, even in the minority on this committee, to push forward an agenda. And what you're seeing here is, Connolly certainly represents the old guard. He's never had a chairmanship before, perhaps moving ahead with him, AOC is still going to be a force in the next Congress, regardless of what happens. She very much has her eyes on higher office, and has proven that over the last several years, as she's become less of a bomb thrower from the squad and more of a someone who rolls up her shirt sleeves and really works within leadership structure and the committee structure of the Hill.
All right, Bloomberg's Megan Scully, who leads our Capitol Influence team. Thank you for joining me. And I want to go now live to Capitol Hill, where joining us from her office is Republican Congresswoman Nicole Malliotakis of New York. Thanks for your patience, Congresswoman. Welcome back to Bloomberg TV and radio. If we could just begin with this continuing resolution that we haven't got eyes on it yet. Should the 72-hour rule be waived in this instance with the midnight Friday deadline? Would you be supportive of that?
I mean, it depends how much time is going to be cut from that 72 hours. I think there's a lot of members that rightfully so, including myself, would actually like to have the time to read the text, right? This is, we said we were done with the days of passing legislation to find out what's in it, right? And obviously, if these bills are hundreds, if not 1,500 pages, that takes time to know exactly what we're voting on, because we do need to respond to our constituents. We do need to be held accountable by our constituents, and we should be. We can't do that if we're voting on legislation without knowing all the details. And so I think there's a lot of questions and a lot of frustration among the membership right now, because we feel like these negotiations have been taking place and we're sort of left in the dark. It has not been a member-driven process. It's been a process driven by leadership. And unfortunately, we're kind of just waiting to see what happens. We shouldn't have to find out what's going on by searching Twitter. That's the bottom line. We are the lawmakers. We all have aspirations here of what we'd like to achieve for our constituents with this final package. I think it's frustrating to a lot of members that we're also seeing this negotiation with the Democrats when we're in the majority, and we should be talking among ourselves and figuring this out.
Well, and you will be in the majority still in the next Congress when the next deadline looms. March 14th, we understand we're going to be doing this whole song and dance over again. And given the narrowness of the majority you will be part of, it is likely that Democratic votes are going to be needed to carry funding over the finish line, Congresswoman. So how would you like to see Speaker Johnson handle it differently than the situation is currently being handled?
Well, I think next year, hopefully, we'll be in a much better situation, given that we will have a Republican trifecta. And I also think that with President Trump at the helm, with his leadership, that he will play a huge role in keeping us united and keeping us focused on the agenda, which is obviously starts with securing our border, the energy policies, the addressing some of the regulatory issues that have stymied investment and development and manufacturing in this country, as well as what is to me, as a Ways and Means member in the House, most important, our tax legislation, which is, if this expires, it will be detrimental to our economy, to American families, because that single-handedly has helped create millions of jobs, lifted American wages, brought employment down to record lows, doubled the standard deduction, it lowered the corporate rate, the income tax rate, it eliminated the alternative minimum tax. And so all of that's at stake next year. And so we have to focus and prioritize these things early on.
Well, and your chairman on the Ways and Means Committee, Jason Smith, has not been shy about saying he thinks if you want to get tax reform passed, it should be included in one big reconciliation package with the border and energy and other issues that are high on the incoming president's agenda. Where do you stand on that? How hard will it be to get tax reform passed if it is a separate package that comes later?
I agree with the chairman that we need to prioritize tax up front. There's just too much at stake, as I just laid out, if these provisions expire. Some have already begun to sunset or have expired. And I get concerned that if we do energy and border security without the tax piece, that there will not be cooperation from some of the members to focus on the tax piece. I think it needs to be done all together. So you have members from border states getting something, you have folks that are from energy producing states getting something, and you have, you know, the fiscal hawks and the Ways and Means tax experts and tax writing committee members getting something as well. So we can help President Trump deliver some of these campaign promises with parameters, right, within reason, but deliver those campaign promises. And so we've done a lot of work in our committee, laying the groundwork, doing our tax team work, roundtables, hearings. We have an idea of our options that are on the table in terms of different parameters that would obviously adjust the cost and the impact. And so we need to work now to build consensus with our colleagues throughout the House.
Well, what about the SALT cap specifically? Bloomberg has reported Trump's economic team is looking at doubling it from 10,000 to 20,000. Is that enough for you?
Well, I think I'm certainly happy that there's something on the table, because we've been advocating for quite some time, the New York members, to get some sort of tax relief in terms of SALT, increasing the standard deduction, doubling it increasing the SALT deduction, doubling it for married couples, I think is a great starting point. We can work on what figures would be the right one. 20,000 may seem a little low for particularly some of the New York members. I'm willing to entertain that if we are also going to increase the standard deduction, as I have had legislation to do. And another important piece for me is the Social Security, the tax on Social Security. I have too many seniors in my district that are struggling paycheck to paycheck on Social Security. They have not adjusted those thresholds for taxable income in 40 years, my entire lifetime. We need to help protect seniors so they can keep more of their hard-earned money. So maybe a bonus deduction for seniors. If we can't adjust the thresholds. And so I think there's a lot of things on the table. There's a lot of moving parts, and obviously every time you move a piece of the puzzle, something happens, right? And so it's a matter of figuring what is doable, what is reasonable, what is doable, and what could satisfy a majority of members to get this thing passed.
I want to ask you, Congresswoman, about something else I'm sure is capturing a lot of attention in your district and other districts in New York, New Jersey, all throughout the Northeast, and that is drones that are high in number and percolating around the sky. It's really unclear exactly what is going on and where these things are coming from. And I wonder what you have heard as a lawmaker and a member of Congress from authorities about this.
Well, unfortunately, we haven't heard much, and that is part of the frustration. And it seems that the federal agencies' stories seem to change. First, they were trying to convince us that these were just small manned aircrafts and that we were misidentifying them as drones. Then they tried to convince us, well, yes, now they're commercial drones and recreational drones. And now they're even trying to tell us that these are stars in some cases that we're seeing and we're misidentifying for drones. It is ridiculous that the American people, and particularly members of Congress who have a responsibility to not just protect our constituency, but have a say in matters of national security, cannot get this information, cannot get a classified briefing. We're going to be offered a briefing today by the White House and Department of Homeland Security at 2:30 today, but it's not a classified briefing. And so I'm sure the information we're going to be receiving is the same stuff we've been seeing on Twitter, which is ludicrous. And so I'm very frustrated by this process. Personally, I believe that these are government operated drones. I don't know whether they're doing some type of counterterrorism activity or exercises, or maybe testing some new equipment for our law enforcement or military. But the bottom line is they should be honest with the American people. If it's classified, they don't need to give us the details to the public. They should give it to the members of Congress, but at least say what it is in terms of that it is military exercises. That I think would be satisfactory to most people, to not think that we're somehow being invaded by another country or another planet.
Of course, Bloomberg can't confirm whether that is the case, as we don't have that information either. Just quickly, though, Congresswoman, in the interim, while everyone's trying to figure out what's going on, do you believe police in New York, other authorities, should have the authority to shoot these things down, or does that present its own kind of danger?
Well, I think in a densely populated area like New York, where we've seen these drones flying over military installations, residential communities, over buildings, over critical infrastructure like the Verrazano Bridge, obviously shooting them down is a concern. But where they're coming over the water shoreline, as we've heard happening in New Jersey, then they should be shot down. And if there needs to be better communication between these agencies. Like, if it is indeed, we find out that it is a federal agency that's operating these drones, wouldn't it be nice if our local law enforcement actually knew about it? If our local military installation knew about it? As far as I'm concerned, and that my conversations with them, they know nothing. They have no idea where these drones, who's operating these drones, and for what purpose. So there definitely is a lack of communication between the federal agencies and also with the different levels of government. Federal government doesn't seem to be keeping the state or the city informed, and that is, I think, very problematic.
All right, Republican Congresswoman Nicole Malliotakis of New York, thanks for joining us here on Bloomberg TV and radio. Happy holidays to you and yours, and we'll look forward to touching base with you again when the 119th Congress begins in January. We still have much more ahead here on Balance of Power. Our political panel today, Jeannie Shanzano and John Seaton, will join me as we talk more about what's going on the Hill and the Trump transition and beyond. That's next on Bloomberg.
dive today into the Eurozone economy.
My name is Konstantin Stefana. I'm the owner of the family office and the company called Company I Limited. I also have a live streaming channel for startups. It's SG Trader, so anybody, we let startups to pitch investment community on our channel. I give them 3-minute pitch. We publish their video on our channel, and everybody who is interested, please welcome to send me your video, and I will publish. I will roll for almost a month your video for all financial community. The channel is live. It's streaming live 5 days a week from morning to night.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Right.
And it looks like there's a lot going on.
Yeah.
You know, some good, some bad.
Right.
So if our listener is thinking about maybe a European vacation or just wants to know how things are going across the pond,
Yeah.
this is where you want to be.
Absolutely.
Yeah.
It's a really interesting time to be looking at the Eurozone.
Yeah.
I mean, one of the things that's so fascinating is, you know, how different sectors are really telling different stories.
Okay.
And like the service sector, for instance, it's really showing some unexpected strength lately.
Okay, so like break this down for us a bit. What's making the service sector so strong in the Eurozone?
Well, one of the key indicators we look at is the Purchasing Managers Index,
Right.
or PMI, which basically gives us a pulse check on different industries.
Okay.
And anything above 50 signals growth.
Right.
And the service sector PMI just jumped to 49.4.
Okay.
So not quite in growth territory,
Right.
but it beat predictions,
Okay.
which suggests some underlying strength there.
Interesting. So people are still spending on services even with all the, you know, the economic uncertainty. What does that tell us about the mood in the Eurozone?
That's a good question.
Yeah.
You know, it could mean that consumer confidence isn't as shaken as some might think,
Okay.
or it could point to like a shift in spending habits,
Yeah.
you know, with people prioritizing experiences over physical goods.
Right.
We'll have to see how that develops.
Now, the article also mentions that manufacturing is kind of lagging behind.
Yeah.
In fact, the manufacturing PMI is stuck at 45.2,
Right.
which is not a good sign.
No, not at all.
Why is there such a big difference between the two sectors?
I think it's probably a bunch of factors. You know, global competition is definitely playing a role.
Yeah.
Especially from Asian markets.
Right.
We're also seeing the impact of automation which is changing the face of manufacturing in Europe. And then, those changing consumer preferences that we were just talking about. So it's a complex picture.
So is this a sign that the Eurozone economy is like shifting away from manufacturing and more towards services?
That's a possibility.
Okay.
And it's something that economists are watching very closely.
Right.
Because if it continues, it could have, big implications for jobs and investment and the overall economic landscape.
Yeah, for sure. And speaking of big players, let's talk about the European Central Bank.
ECB.
The ECB. Right. They recently cut interest rates.
They did.
And this report kind of seems to support that.
Absolutely.
So explain that.
So they cut rates by 25 basis points, which just means 0.25%.
Okay.
Citing concerns about slowing economic growth.
Okay.
And they believe that inflation is starting to cool down.
So if our listener is planning that European trip, could this affect how far their dollar goes?
It certainly could.
Yeah.
Lower interest rates can make a currency less attractive to foreign investors.
Okay.
Who are seeking higher returns.
Right.
And this can lead to, a decrease in demand for the euro.
Yeah.
Causing it to weaken against other currencies, like the US dollar.
Now, the report also mentioned something that seemed a bit counterintuitive.
Oh.
It said there's like a faster pace of job cuts and that the ECB sees that as a way to lower inflation.
Yeah, it seems kind of strange at first glance, but it does make sense if you think about it.
Okay.
Fewer jobs can mean slower wage growth.
Right.
Which in turn can help cool down inflation.
Okay.
It's all about managing those levers and trying to find that sweet spot where the economy can grow without prices spiraling out of control.
But wait, there's another layer to this, right?
Okay.
The report also found that like input costs, which is what companies pay for materials and supplies, and output prices, which is what they charge for their products, are rising at a faster pace. So we've got job losses, which aren't great, potentially helping with inflation, which is also a problem. It's like they're fighting each other.
Exactly.
Yeah.
And that's the challenge for the ECB. They're trying to balance these competing forces.
Yeah.
They want to stimulate growth.
Right.
But they also need to keep inflation in check. So it's a delicate balancing act.
Yeah.
And these latest figures really show how complex the situation is.
It's definitely not simple.
No.
Now, the article also highlighted some interesting differences within the Eurozone itself.
Okay.
It mentioned that Germany and France,
the
two biggest economies, are still struggling, while some other countries are actually doing better.
It's true.
So what's going on there?
Well, Germany and France are facing their own challenges, including, a slowdown in manufacturing and weaker consumer spending.
All right.
However, countries like Spain and Italy have actually seen some positive development.
Oh, wow.
With their economies growing at a faster pace.
So what does this mean for someone who wants to go to Europe? Could they find better deals in some countries?
That's a possibility.
Okay.
Of course, it's always wise to do your research.
Right.
And, look beyond just the exchange rate.
Yeah.
But understanding these regional variations can definitely help you make more informed decisions.
Okay.
About where to go and what to expect.
So this brings us to the million-dollar question, right?
Yep.
What's the outlook for the euro-dollar exchange rate?
Well, the article suggests that the euro-dollar rate is likely to stay within a pretty narrow range of 1.0450 to 1.06 for the near future. That being said, the upcoming Federal Reserve decision in the U.S. could throw a wrench in things.
Ah, yes.
Yeah.
The Fed. They always keep us guessing.
They do.
So what could make the euro break out of that range?
Well, a few things.
Okay.
Like the Eurozone suddenly starts pumping out surprisingly strong economic data.
Okay.
That could boost the euro.
Right.
A major shift in monetary policy from the ECB.
Okay.
Like a surprise rate hike instead of another cut.
Yeah.
Could also send the euro soaring. And then, of course, there are always global events that can impact investor sentiment.
Sure.
And cause currencies to fluctuate.
So lots of moving pieces.
Lots of moving pieces.
That's what makes economics fun.
Absolutely.
It's a puzzle.
It is.
And this deep dive is helping us put the pieces together.
That's what we're here for.
Now, before we move on to part 2,
okay,
let's take a quick step back and recap what we've learned.
Sounds good. We've covered a lot.
We have. First, we saw how the Eurozone economy is sending kind of mixed signals with the service sector showing some resilience,
Yeah.
but manufacturing continuing to struggle.
Yeah. definitely two different stories there.
And we talked about how the ECB is trying to navigate this complex landscape by cutting interest rates to stimulate growth while also keeping a close eye on inflation.
Yep, got to keep an eye on that.
We also discussed how those interest rate cuts could potentially weaken the euro, which might be good news for travelers looking for bargains, but could have bigger impacts for the Eurozone economy as a whole.
It's true. There are always trade-offs.
And we even touched on how those regional differences within the Eurozone might create some opportunities for travelers who do their research, know where to look.
Absolutely. A little homework can go a long way.
So much to consider.
A lot going on.
That's why we do this, to give our listener the information they need to make sense of it all.
Exactly.
Now let's move on to part 2, where we'll explore some of these themes in even more detail.
Looking forward to it. Yeah, it's definitely a dynamic situation.
For sure.
And the ECB is right in the thick of it, trying to steer the Eurozone economy through these choppy waters.
And speaking of the ECB, let's go back to that interest rate cut we were discussing. They cut rates by 25 basis points.
Right.
Which, as you explained, could potentially weaken the euro.
Yeah.
But is that the end of the story?
Well,
could we see even more rate cuts in 2025?
That's the big question.
Yeah.
The
Yeah.
ECB is definitely signaling that further cuts are a possibility.
Okay.
If the economic situation doesn't improve.
Right.
They're walking this tightrope,
Yeah.
trying to balance the need for growth with concerns about inflation.
So if our listeners thinking about, exchanging dollars for euros for that trip, what's your take on the timing? Should they exchange now or wait to see how things unfold?
Well, I can't give financial advice.
Of course.
But it's always a good idea to stay informed.
Right.
And, consider your own personal circumstances.
Yeah.
If you don't like risk,
right,
you might want to exchange some now to lock in a rate.
Okay.
But if you're willing to gamble a bit, you could wait and see if the euro weakens further.
Okay.
So it really depends on your, your risk tolerance.
Right. Okay. Now let's go back to those PMI figures for a second.
Okay.
The article pointed out that while the service sector PMI was a good surprise, the details showed that input costs and output prices actually increased in December.
Yes, that's a really important detail to remember.
Yeah.
It suggests that inflationary pressures are still bubbling under the surface of the Eurozone economy.
But didn't the ECB say they think inflation is getting under control?
Well,
this seems like a mixed message.
It does, doesn't it?
Yeah.
And that's what makes this whole situation so interesting.
Right.
We have conflicting signals coming from different parts of the economy.
Right.
It's a reminder that economics is rarely straightforward.
Yeah.
There are often multiple forces at play.
Yeah.
Pulling in different directions.
So even with job losses
potentially
helping inflation, these rising input and output costs could make inflation worse.
They could.
It's kind of an economic puzzle.
Absolutely. And it's one that the ECB is trying to solve in real time.
Right.
They're watching all these indicators very closely.
Yeah.
And their next move will really depend on how the data evolves.
Right. Speaking of central banks making moves,
Yeah.
let's shift over to the U.S.
Okay.
and look at the Federal Reserve, or the Fed.
The Fed, right?
They're also expected to make an interest rate decision soon.
They are.
And that could have a big impact on the euro-dollar exchange rate.
It could.
What do you think?
You're right. The Fed's decision is a key factor here.
Yeah.
The article mentioned that they're expected to cut rates as well.
Right.
But you know what's going to be even more important?
What's that?
Is the messaging that comes with the decision.
So it's not just the rate cut, but how they talk about it.
Exactly.
Why is that so important?
It's all about managing expectations.
Okay.
The Fed's going to use their statement and press conference to signal their future intentions.
Okay.
Will they hint at further cuts down the road?
Right.
Or will they suggest a pause?
Okay.
The markets will be hanging on their every word.
Yeah.
Trying to figure out what the Fed will do next.
Right. Okay. So let's bring this back to our listener.
Okay.
What are the key things they should keep in mind?
Well, first and foremost, the Eurozone economy is a mixed bag right now.
Okay.
There are both positive and negative signals.
Right.
And it's really important to look at the big picture.
Okay.
Rather than focusing on just one thing.
So don't just focus on that strong service sector PMI. Right. Ignore those sluggish manufacturing numbers.
Exactly.
Or the fact that inflation might be worse than the ECB wants.
Yeah, it's about seeing the whole picture.
Right.
Second, the ECB is definitely trying to manage the situation.
Right.
But they're facing this really tough balancing act.
Yeah.
They want to stimulate growth.
Right.
But they also need to keep inflation in check.
Mm-hmm.
So their next moves are really going to depend on how things change in the coming months.
So stay tuned.
Stay tuned.
And remember that the ECB is reacting to the data
Yeah.
and adjusting as needed.
Exactly. They're not just sticking to a plan no matter what.
Right. And lastly, the euro-dollar exchange rate is likely to be volatile for a while, influenced by both the ECB
Right.
and the Fed.
Yeah, both of them.
It's like trying to predict the weather.
Yeah,
So many factors involved.
lots of variables.
But just like you can make better decisions if you understand the weather forecast.
Yeah.
You can make smarter financial decisions if you understand what's driving the economy and the
Right.
currency markets.
It's all about understanding those forces
I totally agree.
and using that knowledge to your advantage.
Okay. Well, I think we've done a pretty good job of, explaining this today.
I think so too.
We've explored the latest data.
Yeah.
We analyzed the ECB's moves
Uh-huh.
and even thought about how this might affect our listener.
Yeah, and hopefully they found it helpful.
Me too. Now let's move on to the final part
Okay.
where we'll explore some possible scenarios for the Eurozone economy.
Sounds good.
All right, so we've talked about a lot with the Eurozone economy.
We have.
The mixed signals, the ECB trying to balance things,
Mhm.
the euro possibly weakening. It's a lot.
It is.
But here's the real question.
Okay.
What does all this mean for you, the listener?
That's the important part of it.
Exactly. So let's imagine we're investors. We're looking at the Eurozone.
Okay.
We see that service sector doing well.
Right.
But manufacturing is having trouble.
Yeah.
Interest rates might get cut again. And inflation's still a worry.
Right.
So knowing all that, would you invest in European companies?
That's a tough one.
Yeah.
There's no easy answer.
Right.
It depends on your strategy,
Okay.
how much risk you like,
Right.
and what you think about Europe long term.
So, like, if you're cautious,
Yeah.
what parts of this would make you hesitant?
Well, manufacturing still being weak is definitely a problem.
Okay.
It means some of those bigger issues haven't gone away,
Right.
and more rate cuts,
Yeah.
that could be a bad sign.
Okay.
Like people don't trust Europe to grow.
But on the flip side,
Yeah.
what if you're optimistic? What looks good?
Well, the euro being weaker could be good for some companies.
How so?
Their stuff becomes cheaper to sell in other countries,
I see.
and the service sector doing well
Right.
shows there's still strength in the eurozone.
So it's like two stories at once.
Kinda, yeah.
One of Europe struggling to change and another of people still spending money.
It's both, and that's what makes it so complex.
Economics is rarely simple, huh?
Rarely.
It's about understanding those little details, whether you're investing, traveling, or just want to know what's going on.
It helps you make better choices.
Well, I think we did a good job breaking this down.
I think so too.
We looked at the numbers,
Yeah.
we saw what the ECB is doing,
Mhm.
and hopefully helped you understand how it all connects.
That's the goal.
It was great talking about this with you.
Likewise. Always a good discussion.
And listeners, this is just the start.
Yeah, keep learning.
There's always more to find out, so stay curious.
Absolutely.
Keep asking questions.
Keep digging.
And never stop exploring the world of economics.
Until next time.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Losses for the Dow, the S&P, NASDAQ 100 index, and the Russell 2000. A lot of red on the screen ahead of the Fed decision tomorrow. Traders are weighing strong U.S. retail sales data. Right now, we got the S&P down 25. Now it's 6,048 for the S&P 500 index, a drop right now of 0.4%. Dow Jones Industrial Average down 320, a decline of 0.7%. Ninth drop in a row on the Dow Jones Industrial Average. NASDAQ down 57, a decline of 0.3%. The NASDAQ 100 index down 0.4, and the Russell 2000 index of small cap shares down by 1%. 10-year 4.37%, with a 2-year that's yielding 4.23%. Gold down $5 the ounce, down 0.2%, 26.47, and West Texas Intermediate crude down 1.2%, 69.88 a barrel. Bitcoin right now up 1.2%, 107,259 now on Bitcoin. The Biden administration has taken another step in its push to combat so-called junk fees as the Federal Trade Commission mandates more price transparency for consumers shopping for live event tickets and hotel rooms. Live Nation entertainment shares, they're down by 0.2%. Again, recapping, S&P down 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That's a Bloomberg Business Flash. Balance of Power continues now. Back we go to Washington. Once again, your host, here she is, Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. I'm Kaylee Lyons in Washington, where we have been tracking a lot of news domestically this hour, but we also want to talk about the developments today in geopolitics, and specifically some important news out of the Middle East, with Israeli officials essentially signaling that a ceasefire in Gaza, with Hamas, of course, may be closer now than it has been at any point in the last year. We want to get into this now with Nick Wadhams, who leads our U.S. national security team here in Washington. He's here with me in our D.C. studio. So, Nick, I said this earlier today. We have seen what feel like a lot of head fakes in the regard of a ceasefire in the past many months that they have been efforting on. What would be different this time?
Well, there's a lot we are tracking. I was just reading a report in Haaretz saying that there may have been some sort of a breakthrough, citing sources they didn't identify, between Israel and Saudi Arabia. So you would get Saudi support for a potential deal, a possible path to normalization that would, where Saudi Arabia would essentially stand down its desire for a Palestinian state. So it's just another signal of that things seem to be afoot. But what we do know is that Israel has come under a lot of pressure to get something done before President Donald Trump comes into office. We could talk about that a whole, you could write books about why that's the case, but it does feel like there's pressure and things are cooking. It just feels a little different this time than it has in the past. I mean, we still have some very big questions about it, but seems like things are afoot right now.
And how much of this also is because another circumstance that has changed is that Bashar al-Assad is out as the dictator in Syria, which has cut off Iran's mechanism for essentially providing more ammunition and arms toward Hezbollah. And then, of course, that weakens Iran and its proxies, including Hamas, even further.
Right. So the Syria issue is put in context. I mean, obviously, it's tough to know how much the actual fall of Syria would have contributed to this, or is more a symptom of a bigger issue where you see Iran and Russia, for example, pulling back, and also you have the degradation over these many months of Hezbollah and Hamas, and whether we've sort of gotten to a point. I mean, this is certainly what you saw with Hezbollah, where they just got so weakened. Israel kept up pressure so intensively and with so much devastation and loss of life that eventually, a ceasefire came about. We may be in a similar situation with Hamas. The big question that Israel's critics say, of course, is that, yes, you can really devastate Hamas as an organization, but not as an idea. So what do you do with Gaza once that happens? And would Hamas be willing to agree to a ceasefire when it doesn't get what it wants, which is Israel withdrawing from the Gaza Strip, which Israel is certainly not going to do anytime soon?
Well, as you mentioned, what happened in Syria has implications not just for Iran, but Russia as well. And I do want to talk about something that happened in Russia earlier today. a bomb explosion killing a Russian general who was the head of Russia's radiological, chemical, and biological defense forces. Ukraine is believed to have been behind this, according to sources familiar that we've cited. What do we need to know here, and how escalatory might this be?
Well, it's seemingly very, very escalatory. I mean, Ukraine has done this with greater frequency over time. They have long chafed at the U.S. idea, which was, listen, we will support you to play defense, but we are not going to support you in playing offense, i.e. in hitting Russia inside its own territory, though they did change that equation a little bit in the last couple of months. But certainly this is something that Western allies of Ukraine have not wanted Ukraine to do, but which Ukraine has said, listen, hey, Russia attacked us. Russia came into our territory. We have every right to go into their territory. Now, the escalation issue is a fascinating one and also a scary one, because for a long time, Ukraine has said, hey, listen, Russia makes these escalation threats, but they don't actually do anything about it. And indeed, you have seen the U.S. and allies really step up their support for Ukraine, and you have not seen the sort of escalatory spiral from the Russian side that a lot of people had feared. Big question is, when you assassinate the head of the nuclear forces inside Moscow, whether this is going to be different.
Well, and the other question it raises, as Donald Trump has made abundantly clear when he comes into office, he wants to see a deal between Ukraine and Russia. He was actually just talking about this at his news conference in Mar-a-Lago yesterday, the idea that a deal does need to happen. Does this kind of action make it harder or more likely?
Yes. I mean, the big one here is, so the U.S., for example, has argued that anything that Ukraine does now will give it greater leverage, put it in a stronger position to be able to negotiate when President Trump comes in and really puts the pressure on Ukraine to do that. So would an attack like this essentially signal to Russia that Ukraine has the power to hit it anywhere and create some incentive for Russia to end this? The challenge there, of course, is that Russia feels like it's actually doing pretty well right now in Ukraine. It's slowly, incrementally gaining territory. President Putin has given no signal that he's really willing to concede any territory or concede any of the demands that Ukraine has put forward. So this is going to be the challenge President Trump faces. He may come in and say, Ukraine, you need to do a deal. It may not be that Ukraine is the problem. It may be that Russia's the problem. And his team is starting to acknowledge that maybe that notion of a deal on day one is going to be a little more difficult than
or just reaching a deal in one day, in general, whatever day that is. Nick Wadhams, who leads our national security team here in Washington, thank you so much. Now, as we discuss what President Trump was saying yesterday in Mar-a-Lago, yes, in part his remarks did pertain to the conflict in Ukraine, but he touched a lot of other different subjects as well, including having to mount a defense for his Health and Human Services Secretary nominee, RFK Jr., who, of course, is making the rounds in the Senate this week, trying to plead his own case to senators. But Donald Trump was making the case for him as well. When asked a question by a journalist about RFK yesterday, this was his response.
I think he's going to be much less radical than you would think. I think he's got a very open mind, or I wouldn't have put him there. He's going to be very much less radical. But there are problems. I mean, we don't do as well as a lot of other nations, and those nations use nothing.
So we want to get more on RFK Jr. now as we consider the idea that he could lead the Health and Human Services Department, and turn to Dr. Leslie Cantor. She is chair of the Department of Urban Global Public Health at Rutgers University and is joining us now here on Bloomberg TV and radio. Dr. Cantor, thank you for your time. When we consider RFK Jr. and the many ideas around public health, around vaccines he has put forward, what gives you greatest pause?
Well, let's start with the fact that we know that vaccines are safe and effective, and that over the past 50 years, more than 150 million lives have been saved around the world because of vaccines. Our biggest problem right now is that there is too much misinformation about vaccines, and that is making some parents unnecessarily frightened about vaccinating their children. We have a tremendous amount of data that shows that the vaccines that are recommended by the American Academy of Pediatrics in this country are going to keep your kids from getting what could be very serious diseases.
Well, something else we heard from the president-elect yesterday was that he does not like vaccine mandates, which obviously we think about a lot when it comes to the required vaccines for children to attend school. What would happen if those were to go away?
Well, we can already see in many states that we are getting below what we would consider community immunity. We used to call it herd immunity, but we're trying to call it community immunity. For example, measles, which is extremely contagious, extremely deadly. You need 95% of people in a community to be vaccinated to make sure that no spread can get going. And we already see in many states that we are a little bit below that 95% mark. We're at more like 90% nationwide. So school mandates are one way to have a place where we make sure that children are vaccinated and that other children are not put at risk because they're unvaccinated kids going to school with them.
Well, and one vaccine we've heard a lot about in particular is the polio vaccine. RFK Jr. on the Hill yesterday seemed to suggest that he is supportive of it. Donald Trump says we're not going to lose it. How important is it that that is true, that people continue to be vaccinated against polio?
You know, I think for anybody who was alive and terrified when polio was around, my father is among those people, and he can't believe, and I don't think most of people that age can believe that we would ever for a second let up on the polio vaccine. One reason that you don't see any of the terrible outcomes of polio is because we are all vaccinated these days.
Well, of course, when we consider what would fall under RFK Jr.'s remit if he were to lead the Department of Health and Human Services, it's not just about vaccinations. There's obviously a number of other issues that pertain to public health, and Donald Trump has talked about some of the good ideas he sees RFK having in other arenas, including, for example, thoughts around food and nutrition and additives in our food. Can you weigh in on some of these other ideas that RFK has put forward and whether any of them, in your mind, do have merit in terms of thinking about better public health?
Sure. Well, to be clear, I am not a nutritionist, but I am familiar with some of the concerns about ultra-processed foods. I think that an examination of our food supply, trying to make people educated about what is important for nutrition. I mean, it is kind of stunning that 70% of our food supply now is considered having at least some ingredients associated with ultra-processed foods. So I think that is something that I think many public health and health professionals could get behind. But there's certainly a lot of concern about any misinformation spreading about things like vaccines or things like fluoride. I mean, if you look at any list of what the big public health accomplishments were between 1900 and 1999, when life expectancy went up so much in this country, you're going to see vaccines at the top, and then you're also going to see fluoride. And by the way, you'll also see family planning, which is something I've spent a lot of my career working on.
Well, and in our final 2 minutes here, I do want to talk to you about that because RFK Jr. has actually faced backlash in some conservative circles for his more pro reproductive rights views that he has held in the past. Just quickly here, what is the relationship between reproductive health access and public health more widely?
Well, we know that when women can make decisions about their methods of birth control, that's absolutely essential to health. And of course, access to abortion is important for wanted pregnancies as well. The only way we can have maternal health in this country is to have access to the full range of reproductive health care.
And do you believe that the pivot we have seen from RFK Jr. After he has become the nominee, talking less about abortion rights, might translate into actual more restrictions on reproductive health?
I hope not, but we know that we do have an administration where a lot of people have very concerning attitudes towards abortion and also towards contraception.
All right, Dr. Leslie Cantor, chair of the Department of Urban Global Public Health at Rutgers University. Thanks for being here on Balance of Power, and stay close. I'm sure we're going to have much more reason to discuss many of these issues as we see the actual confirmation hearings and more of the process getting underway come January. Again, RFK Jr. is on the Hill today, as he was yesterday, taking meetings with some 25 senators this week as he tries to make the case for why he should be confirmed to lead HHS. And there's a number of other Trump nominees who are trying to plead their cases as well. We'll have the latest on that in the late edition of Balance of Power. It's coming up at 5 p.m. Eastern Time tonight. We'll touch on the developments out of Israel and Ukraine as well that we were just talking about with Nick Wadhams. Former State Department official Morgan Ortagus will be with me and my special guest host on this Tuesday, Mike Shepard. So come back and see us at 5. In the meantime, Bloomberg Business Week is straight ahead right here on Bloomberg Television and Radio.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
He is back and fired up.
Oh, I'm fired up. I'm ready.
This Tuesday. Welcome back. We missed you.
Thank you. I missed you guys.
Doing okay?
Yeah, doing great.
Okay.
100%. Back.
Maybe even 110.
Yeah, 110%.
All right. Gotta say the markets, though, kind of mellow on this Tuesday. Call it the pre-Fed decision, Fed decision eve, if you will. The Fed kicking off a two-day meeting today. We'll get that Fed decision tomorrow. I'm Carol Masser, Tim Stenevec. It is, I want to say,
Tuesday?
Wednesday. But did I say?
It's Tuesday.
It's Tuesday.
But tomorrow is a Fed Wednesday, though.
Oh my God. Oh my God. I'm so ready for a holiday break. Before we get that, though, we will get that Fed decision tomorrow. And it's safe to say that investors kind of taking a little bit of a breather until we get that decision. We're going to have more on that, including some retail news that we got today. Consumers still out there shopping. So we'll get more on that and the trade in just a moment.
Also, today's big take, it's about the big U.S. debt problem and the growing risks that come along with it that may face President-elect Donald Trump's pick for U.S. Treasury Secretary. We're talking about Scott Bessent. Again, today's big take. You got to check it out on the terminal.
Yeah, congratulations. If he gets confirmed, congratulations. The U.S. debt problem is yours.
Congratulations.
Congratulations. Deal with it. That stock rally that we have had here in 2024, the high volatility stocks ripping along. What could possibly go wrong, or should we just stop worrying and just say the fundamentals support it?
Well, look, if you look at the S&P 500 for the month of December, we're actually almost flat at this point.
I know, but up to then, right?
Yeah,
like, and even post-election.
Yeah.
The world also awash in AI euphoria and expectations, and yet, big question, everybody. Tim, what is that question?
Can we power it all? I just keep saying over and over again, you just got to plug it in, Carol. That's all you got to do.
No.
Just plug in the AI.
You got to do more than that. There's the grid and the power. Anyway, we're going to get into that over the next 60 minutes. First up, though, let's get to a check on the trading day and your top business stories. Here's Charlie Pelley.
All right, thank you very much, Carol Master. Welcome back, Tim. We have got the Dow, the S&P, NASDAQ 100 index. We'll throw in the Russell 2000, all very much in the red right now. Right to the numbers with the Dow down 284 points. That is a drop of 0.7%. That is also the 9th drop in a row for the Dow average. Longest losing streak since 1978. Put it all in context right now. We got the S&P down 0.4%, down 26. NASDAQ down 71 for the NASDAQ Composite Index, a drop right now of just about 0.4%. 10-year 4.38% with a 2-year 4.23%. Spot gold, little change, down 0.2%, 26.47 the ounce. West Texas Intermediate crude down 0.8%, holding right around $70 a barrel, 70.12 right now, and a move higher for Bitcoin today, right now up 0.5% above $106,000. Honda, Nissan Motor preparing to start negotiations on a possible merger, which could ultimately be expanded to include Mitsubishi. This according to Japan's Nikkei. And right now we have got shares of both automakers, specifically Honda and Nissan. The ADRs right now, Honda up 1.5%. ADRs of Nissan Motor up by 5.8%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic live here on Bloomberg Business Week. Well, we did get some economic data this morning. U.S. retail sales increased at a firm pace in the month of November, bolstered by a surge in car purchases and solid online shopping that masked more mixed spending elsewhere. This came from the U.S. Census Bureau. It said the value of retail purchases not adjusted for inflation increased 0.7% after upward revisions to the prior 2 months. And if you back out autos, sales climbed a more modest 0.2%, Tim, and that was for a second month.
Okay, separate data today showed U.S. industrial production unexpectedly declined for a third month in November on decreases in utility output and mining. Manufacturing output rose less than forecast. With more on the U.S. economic backdrop and what to expect from the Fed tomorrow, back with us is Stephen Skanke, Chief Economic Advisor at the Wealth Advisor Keel Point. Steve, also a former U.S. Treasury and White House National Security Council staff member, serving during the Nixon, Ford, Carter, and Reagan administrations. He joins us this afternoon from Washington, D.C. Steve, good as always to see you on the day before we hear from the Fed chair. This most recent data that Carol and I just mentioned, certainly something that the members of the Federal Reserve Board of Governors are looking at today. Is tomorrow certainly decided, the big picture, what comes in January, February, March? That's what has investors focused?
Well, first, thanks for inviting me on. It's always great to be with you. In answering your question, the markets certainly think that it's decided as to what they're going to do tomorrow. And when you look at all the things that they've said, I think it'd be a big surprise if they didn't cut tomorrow. They basically indicated that, and the economic data has been supportive of that as well. I mean, the estimate for personal consumption expenditure, the core index, that's come down. That's really good news. The employment data was okay, but not overly strong. And what you just said about retail sales, very positive, even with gasoline sales down, and industrial production more tepid, which gives the Fed a little bit more latitude to be confident about not having to not cut rates tomorrow.
Well, and I guess, though, to that point, Steve, some would suggest, wait, why do we even need a rate cut? We've got growth in the United States. The economy still seems to be humming along. So why do we need it?
Well, the biggest concern, Carol, is in the employment side. You know, the unemployment rate ticked up a little bit. The Fed's projection is that it will go higher. We'll see what their summary of economic projections is for tomorrow in terms of the unemployment rate going into 2025. But that's where the Fed's principal concern is. They're okay with where inflation is, especially since it looks like it's starting to come down a little bit again. But they don't want to see job losses or a weak employment market get out ahead of them.
I also wonder how much of the concern, though, you know, again, maybe the argument for not cutting rates is that we still have inflationary pressures, and there are some concerns about policies, tax policies, and other by President-elect Donald Trump that could essentially fuel some growth and also fuel some inflation.
Well, Carol, you're absolutely right about that. And interestingly, that's a little bit why I believe that the Fed would be reluctant not to cut.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. Almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
Well, when I was younger, I used to be in bands. I'd play drums in bands and toured America with them, did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The only reason I stopped it, well, I still play, but not as serious as I did when I was younger, but drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that, we'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the firing line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
Wins. We're going to break down like how unusual this rally is, what's fueling it, and what it could all mean for, you know, your investments, especially with the euro-dollar exchange rate.
So what's interesting about this rally is not just the duration.
Right.
It's the strength.
Right.
You know, you don't see the Euro Stoxx 50 or SX5E outperforming the S&P 500 for 8 straight days every day.
Yeah.
In fact, analysts at Barclays say we've only seen this happen once in the last 25 years.
Wow, once in 25 years. That's pretty rare.
It is. It's like an eclipse.
Yeah.
You know, you don't see that every day. And what makes it even more impressive is the high information ratio.
Okay.
Which means you're getting, you know, good risk-adjusted returns.
Yeah, right.
You're getting a lot of bang for your buck.
Yeah.
But of course, the question is,
Yeah, what's driving that?
what is causing this surge? What's driving it?
Yeah.
So Barclays has identified 3 main factors at play.
Okay.
The first one is what they call significantly bearish positioning.
Oh.
So imagine everyone thinks that, you know, a soccer team,
Right.
they're going to lose their next match.
Okay, yeah. Yeah.
So they're all betting against them.
Yeah.
Then suddenly the team wins.
Wow.
Now, everyone who bet against them has to scramble to cover their losses.
I see. So like everyone was, I guess, pessimistic.
Yeah, pessimistic.
About the European market, so they were betting against it.
Exactly. And that pessimism, that's what we call bearish positioning.
Okay.
And when the market didn't crash like everyone expected, it actually created this perfect environment for an upswing.
So everyone's like rushing back in.
Exactly. Everyone's trying to make up for those losses.
I see. I see. So is that where this technical driven squeeze comes in?
Yes, exactly. So all that rushing to buy back in,
Right.
it can really create a snowball effect,
Okay.
especially with short selling involved.
Right.
It's like, imagine, you know, you bet against that soccer team
Yeah.
and they keep winning and winning. You probably want to cut your losses at some point.
Right. You don't want to keep losing more.
Exactly. So
No.
you buy back in, hoping to avoid even more losses.
Right, right. Okay, that makes sense. So negative sentiment created this opportunity.
Yeah.
And then everyone rushing back in just kind of fueled the fire.
Yeah, it fuel to the fire. Exactly.
But the third factor, this is what I'm a little confused about.
Okay.
The potential for ECB rate cuts.
Right.
Doesn't that weaken a currency?
Yeah. So that's the interesting thing.
Okay.
Usually, when a central bank like the ECB hints at rate cuts, yeah, it can make their currency less attractive.
Right.
But here's the twist.
Okay.
The expectation of these cuts is actually being interpreted as a positive for European stocks.
So even though the euro might weaken, it could actually boost European companies.
Exactly. It's like a balancing act, really.
Okay.
So while lower rates might impact the euro,
Right.
they can also stimulate the economy
I see.
because it becomes cheaper for businesses to, you know, borrow money and invest.
Right. Okay.
And this can lead to higher company earnings.
Oh, okay.
And that could push stock prices up.
Oh, I see. I see.
Plus, don't forget, the market was kind of bracing for a downturn.
Right.
So any sign that the ECB is willing to step in and help
Yeah.
is seen as a good thing.
Like a safety net.
Yeah, exactly. A little bit of support.
Okay. Okay. It's like the market was holding its breath
Yeah.
and now it can finally exhale a little bit.
Exactly.
But then there's this other thing, right? Where like even small bits of good news, it seems like, have been like making big waves.
Absolutely.
Yeah.
It's almost as if investors were like starved for any kind of positivity.
Yeah.
You know, remember that initial bearish sentiment?
Yeah.
When expectations are so low, any little positive development,
Yeah.
it can seem like a huge win.
Right, right. So we've got this mix of factors, you know, bearish positioning, technical squeeze, potential rate cuts, and this market that is just like super sensitive to any good news.
Very sensitive, yeah.
It's no wonder the Euro Stocks 50 is like taking off.
It's soaring.
But can it last?
Right. That is the million-dollar question.
Is this the start of something big, or are we headed for like a sudden drop?
That's the big question. So when Barclays looked at the historical data for, you know, similar squeezes in the SX5E, the picture is a little mixed.
Okay.
Some were followed by long rallies,
Right.
and others kind of fizzled out and led to corrections.
So there's no easy answer.
It's really hard to say for sure.
Like trying to predict the weather?
Exactly. You could look at all the signs, but there's always that element of unpredictability.
Right, right. But even with all this uncertainty, you mentioned that Barclays still sees like some good reasons to consider European equities.
Yes, that's right.
Even now.
Despite all the uncertainty,
Yeah.
this market environment may present some unique opportunities.
Okay.
Especially if you know where to look.
Okay, so where should we be looking?
Well, one area that stands out is option pricing.
Okay, options. Now this is where I get a little lost.
Yeah, I understand. Options can seem a bit complex,
Yeah.
but they can also be powerful tools.
Okay.
Think of them like insurance for your investments.
Oh, okay.
You pay a premium for the right to buy or sell an asset at a specific price
Right.
in the future.
Okay.
And the recent rally has actually made these premiums, also known as implied volatility, much cheaper for European indices.
Right.
In fact, we're seeing levels close to their lowest point in 5 years.
So it's like getting insurance at a discount.
Exactly, like a sale on insurance.
Okay, that makes sense.
And it's not just the overall cost of options.
Right.
The call skew has also declined.
Now, I'm going to need you to break that down for me. What is
okay.
call skew, and why should I care if it's going down?
Okay, so call skew essentially tells you how much more expensive it is to buy call options.
Okay.
Which are bets that the price will increase.
Right.
Compared to put options, which are bets that the price will go down.
Gotcha.
So a lower call skew basically means it's getting cheaper to bet on the market going up.
Okay, so if someone is like optimistic about the Euro Stocks 50,
Yeah.
now might be a good time to like look at options.
Yeah. It'd be a good time to explore that. It doesn't mean the rally is guaranteed to continue, of course.
Right.
But options can provide a way to, you know, participate in any potential upside while limiting your risk.
So it's like having like a safety net
Exactly. A little bit of a cushion.
while you're, you know, doing something risky.
Exactly.
Okay, that's reassuring. So now what about this steepening volatility term structure that Barclays mentioned?
Oh, yes. The volatility term structure.
What is that?
It sounds complicated, but it's not really.
Okay.
It basically refers to how volatility expectations
Okay.
change over different time frames.
Okay.
And in the case of the Eurostoxx 50, we're seeing a much wider gap between short-term and medium-term volatility.
Can you give me an example? Like, what does that look like?
Sure. So let's say the volatility for 1 month options is relatively low right now.
Okay.
Maybe because everyone's focused on this short-term rally.
Right.
But the volatility for, say, 6 month options is much higher.
So that means that like things seem calm now.
Yeah.
But there's still like a sense of unease
Yeah, exactly.
about what might happen later on.
That's a great way to put it.
Like enjoying a sunny day at the beach.
Yes.
But knowing that there might be thunderstorms later.
Exactly. A perfect analogy.
So does that mean this is a good time to like buy?
Well, it actually presents an interesting opportunity
Okay.
for investors with a longer term outlook.
Oh,
Yeah,
okay.
yeah.
So if there's like this uncertainty, why would longer term investors be interested?
Well, think of it this way. If the market is pricing in more risk for the medium to long term,
Mm-hmm.
it could mean that assets are undervalued compared to where they might be
Right.
in, 6 months or a year.
So for someone willing to like ride out the bumps, this could be a chance to buy low.
Exactly.
Hoping to sell high later on.
It's a classic buy the dip scenario.
Right.
But of course, it's not without its risks.
Right.
That's why it's important to, do your research.
Of course.
And understand the downsides.
And speaking of risks, we can't forget about the euro dollar exchange rate
Yes, that's important.
and how this rally might impact it.
Right.
We talked earlier about how those potential ECB rate cuts,
Yeah.
which, could be good for European stocks. Might actually weaken the euro.
Right.
But then you also mentioned that like the positive momentum in the stock market might actually counteract that.
Precisely. It's kind of like a tug of war.
Okay.
You know, on one hand, lower interest rates usually make a currency less attractive.
Right.
But on the other hand, if European companies are doing well and investors are optimistic about the future, that could increase demand for the euro and potentially offset the impact of those lower rates.
So it's like a seesaw with all these different forces pushing and pulling.
Exactly.
So if someone is like trying to figure out where things are headed, like what should they be watching?
That's a great question.
Yeah.
First and foremost, I'd keep a close eye on economic data coming out of the Eurozone.
Okay.
Things like GDP growth, inflation numbers, unemployment rates, you know, all those things will give you a sense of the health of the European economy.
Okay.
Is this rally a sign of a true recovery
Right.
or just a blip?
Right. Right. And of course, anything from the ECB.
Of course, yeah.
Especially about interest rates.
Absolutely. The ECB's actions and statements will be key in understanding how they view the current situation.
Yeah.
And if they plan to provide more support.
It seems like you need to pay attention to a whole bunch of things.
Yeah, there are a lot of factors at play.
That's what makes it so interesting, right?
Exactly. It's a dynamic world constantly evolving.
Yeah.
And that makes it challenging,
Right.
but also rewarding.
So no crystal ball, but by staying informed, investors can hopefully like make good decisions.
Precisely. Stay informed, do your research, and be ready to adapt.
Okay. Adapt as things change.
Exactly.
And who knows, maybe this rally is just the beginning of something bigger.
It's possible. We'll have to wait and see.
That's the exciting part.
Yeah.
Thanks for joining us on this deep dive into European markets. We hope you found it insightful.
Thanks for having me.
And as always, keep exploring.
Yeah.
And learning.
Keep learning.
So if there's like this uncertainty, why would longer term investors be interested? It seems counterintuitive.
Well, think of it this way. If the market is pricing in more risk for the medium to long term, it could mean that assets are undervalued.
Okay.
Compared to where they might be in, 6 months or a year.
So for someone willing to like ride out the bumps, this could be a chance to buy low, hoping to sell high later on.
It's a classic buy the dip scenario.
Right.
But of course, it's not without its risks.
Right.
That's why it's important to, do your research.
Of course.
And understand the downsides.
And speaking of risks, we can't forget about the euro-dollar exchange rate.
Yes, that's important.
And how this rally might impact it.
Right.
We talked earlier about how those potential ECB rate cuts, which, could be good for European stocks, might actually weaken the euro.
Right.
But then you also mentioned that like the positive momentum in the stock market might actually counteract that.
Precisely. It's kind of like a tug of war.
Right.
On one hand, lower interest rates usually make a currency less attractive.
Right.
But on the other hand, if European companies are doing well and investors are optimistic about the future, that could increase demand for the euro.
Right.
And potentially offset the impact of those lower rates.
So it's like a seesaw with all these different forces pushing and pulling.
Exactly.
So if someone is like trying to figure out where things are headed, like what should they be watching?
That's a great question. First and foremost, I'd keep a close eye on economic data coming out of the Eurozone.
Okay.
Things like GDP growth, inflation numbers, unemployment rates, all those things will give you a sense of the health of the European economy.
Okay.
Is this rally a sign of a true recovery?
Right.
Or just a blip?
Right, right. And of course, anything from the ECB.
Of course, yeah.
Especially about interest rates.
Absolutely. The ECB's actions and statements will be key to understanding how they view the current situation.
Yeah.
And if they plan to provide more support.
It seems like you need to pay attention to a whole bunch of things.
Yeah, there are a lot of factors at play.
It's what makes it so interesting, right?
Exactly. It's a dynamic world constantly evolving.
Yeah.
And that makes it challenging.
Right.
But also rewarding.
So no crystal ball, but by staying informed, investors can hopefully make good decisions.
Precisely. Stay informed, do your research, and be ready to adapt.
Okay. Adapt as things change.
Exactly.
And who knows, maybe this rally is just the beginning of something bigger.
It's possible. We'll have to wait and see.
That's the exciting part.
Yeah.
Thanks for joining us on this deep dive into European markets. We hope you found it insightful.
Thanks for having me.
And as always, keep exploring and learning.
Keep learning.
So if there's like all this uncertainty,
Yeah.
why would longer term investors be interested?
Right.
It seems a little counterintuitive.
Yeah, it does seem that way. But think about it this way.
Okay.
If the market is pricing in more risk for the medium to long term,
Okay.
that could actually mean that assets are undervalued
You're right.
compared to where they might be, 6 months or a year from now.
So you're saying for someone willing to kind of like ride out those bumps,
Exactly.
this could be a chance to buy low and hopefully sell high later on.
Exactly. It's the classic buy the dip scenario.
Oh yeah, classic.
But of course, it's not without risk.
Right. Of course not.
That's why it's always crucial to, do your research.
Yeah.
And understand the potential downsides.
Right. And speaking of risks, can't forget about that euro dollar exchange rate
Yeah, that's a big one.
and how this rally might impact it.
Right.
We talked earlier about how those potential ECB rate cuts
Yeah.
could be good for European stocks, but might weaken the euro. But then you mentioned that the positive momentum from the stock market might actually counteract that.
Exactly. It's a bit of a tug of war.
Oh, okay.
On the one hand, lower interest rates can make a currency less attractive
Right.
to foreign investors.
Right.
But on the other hand, if European companies are performing well
Okay.
and investors are feeling good about the future,
Yeah.
that could increase demand for the euro
Okay.
and offset the impact of those lower rates.
So it's like a seesaw with these different forces kind of like pushing and pulling.
Exactly, a constant push and pull.
So much to think about.
It is.
What should people be watching closely?
Well, if I were an investor,
Yeah.
first and foremost, I'd keep an eye on economic data coming out of the Eurozone.
Okay.
Things like GDP growth, inflation numbers,
Yeah.
unemployment rates, all that.
Okay.
All those things will give you a sense of the health of the European economy.
Okay. So is it actually recovering?
Yeah, is it really bouncing back?
Or is this rally just like a temporary thing?
Yeah, exactly. Is it sustainable?
And of course, we can't forget about announcements from the ECB,
Absolutely.
especially about interest rates.
Yeah. Anything about interest rates is going to be big news
Big news.
because the ECB's actions and their statements
Right.
are really key
Yeah.
to understanding how they see things
Oh, okay.
and what they might do to support the economy.
It really seems like you need to be paying attention to so many things.
You do. It's a lot to keep track of.
But that's kind of what makes it so interesting, right?
Exactly. That's the beauty of it. The financial world is always changing.
Yeah.
It's dynamic, and that makes it challenging, but also incredibly rewarding.
So there's no crystal ball?
Unfortunately not.
But being informed is key.
This is absolutely key. Stay informed, do your research,
Yeah.
and be prepared to adapt as things change.
Be adaptable.
Exactly.
Well, that's great advice.
Thank you.
Thanks for joining us for this deep dive into the European markets and the euro.
It was my pleasure.
Hope you learned something.
Me too.
We encourage you to keep exploring and learning.
Always keep learning.
Until next time, happy investing, everyone.
Happy investing.
Data stored in some country that they don't necessarily trust. So you run into issues with that. And as far as moving other users of power, can't really move homes overseas without moving the family there. Obviously, that's complicated. And then a big factory, we want the big factory here because we want the jobs and we want the stuff produced here. So those power demands are also onshore.
There's so many things that are coming to mind. Remind us, guys, about the rules and regulations that are in place in terms of carbon emissions, that the kind of commitments that companies and individuals or institutions have to abide by under the current administration or under the current rules, and how a new administration might change some of that.
Okay, well, when Biden came into office, he said he wanted to have a 100% clean power grid by 2035, and they set a 2050 net zero target. But these aren't really binding. These were goals, and I'm seeing increasing pessimism about reaching those goals.
And they don't even seem very close in the sense of years. Like, those are pretty far off.
Anyway, right?
Yeah.
But yeah, and we had so many companies, especially in like maybe the last 5 years, come out with their own internal net zero goals. And a lot of them were like really impressive and really ambitious. We're going to, utilities that promised to stop burning coal, big tech companies that said all of our operations are going to be carbon free.
Yeah, that was before ChatGPT.
That's the problem. So these things were not binding. And now we're seeing a lot of companies kind of going radio silent on their goals, or some of them are just straight out saying, yeah, we're not going to make that.
Does it matter if it's a global company? In other words, because it's got to deal by global rules and global regulations, or no? Not necessarily, in terms of hitting carbon emissions, reductions.
The utilities, so the power companies actually producing
Here.
the power, they're here, so their goals are here. We're already seeing those get kind of a little eroded around the edges. Companies saying, well, we said we're going to be done with coal by 2030. We're actually going to be running these coal plants a little longer, but we're still sticking to our 2050 net zero goal. We're kind of seeing those eroded a little bit, but the way one energy analyst put it to me recently is he said, I mean, unless a company's goals are tied to some kind of state law, they're not really worth the paper they're written on, because they'll just keep getting eroded, and then as it gets closer to 2050, they'll get, maybe completely tossed out the window.
Hey, Will, what about nuclear? Where does nuclear come into this?
Which is something like, I feel like in the last 2 years, we all of a sudden hear everybody talking about nuclear energy.
Yeah, but I mean, you've spent a lot of time visiting
Sure.
nuclear facilities. Not so easy to just put a shovel in the ground and build one.
No, nuclear is great. I mean, Josh was talking about baseload power. You know what's even better for baseload? Nuclear. It runs like 97, 98, 99% of the time over the course of a year. You know what's not great about nuclear? It takes years to build. So we've got all of these companies. Seriously, in like the last couple of months, a lot of the big tech companies have announced these really big deals to use nuclear power to power their data centers in 2030 something when they're built, because there aren't any extra nuclear power plants laying around, and it's going to take years to build them. And they're working with companies that are developing new technologies, so they hope they'll be ready in the next 5 years, but it's, there's always the chance they can get delayed. So in the meantime, there's going to be a lot of gas.
It's kind of ironic, right? The move to clean energy is kind of complicating this process, right? In terms of wanting, as you said, the electrification of so much, that it's making it difficult to kind of hit these targets. And I'm looking at, a headline from today, California reeling from extreme weather as the wildfire risks return. And they also talk about another atmospheric river up in Northern California. I mean, as we are talking about this, we continue to see it firsthand, and increasingly the impact of climate change. So I just wonder kind of where this all leads us.
Yeah, that's the right question. And the answer is we don't know. We are seeing climate disasters in real time. In the summer, it's too hot. Now in the fall and the winter, we're getting too much rain.
And wildfires like in New York City, which are like unheard of.
Yeah, make for great sunsets, but it smells bad. And we're seeing the climate really has been affected. And that's the right question to ask, because all these factories are trying to decarbonize, but then where do you get the electricity? The people that point out, oh, you think you're so green because you've got an EV, but you're powering it with coal power. So there's a lot that has to happen. It's not an easy switch.
Well, Josh, this is your beat. I mean, you're energy and climate disasters reporter. So what is the fundamental connection between these two things?
I see it that, of course, the factories that produce the things we need for clean energy require power, but anything that we produce requires power. So I think overall that transition is still good for decarbonization, is still good for putting less carbon into the atmosphere, and hopefully at least not accelerating those kinds of wildfires and those other things we're talking about. And I think that's more important than.
Yeah, well, okay, so Will, come on in here, because you mentioned the grid, and this is something that we haven't spent a lot of time talking about, the health of the grid. And it's sort of this patchwork, at least here in the United States, where, you have, Texas always comes to mind, for example, given the freeze that they saw a few years ago and the failure of the grid. Where does the stability of the grid come into the conversation?
That's another huge issue. Lots of the grid is not so stable. A lot of the wires have been standing there for years, and when a hurricane comes through, they get knocked down. The utilities say they want to underground the wires because it's more reliable, which is a great idea, but expensive. You use the word patchwork. I think that's a pretty good word, especially because it's multiple systems operated by so many different companies in so many different jurisdictions with different rules. It's complicated.
Well, we know it's like not easy. Josh, I also do wonder, is there something else within the alt energy space or new energy space that we're not talking about? My husband constantly is like, what about hydrogen fuel cells? Like, that makes sense to me. Like, I'm just curious, is there something that, I don't know whether it's in the next year or next 6 months or next 2 years that we start talking about that might help this situation? And just got about 25 seconds.
I think a lot of those things, fusion, hydrogen, a lot of those things are pretty far off. I think right now it kind of is just back to the basics. That wind and solar takes some pressure off the grid.
Yeah.
And but yeah, right now it just looks like the next year looks like just more gas.
I want to say, are you guys optimistic?
No.
No.
But you'll be busy.
No, at Thanksgiving, my
Lots to
family
write
asks me, it's like, what about this climate thing? Are we going to solve it? I'm like, I hope so, but I'm not optimistic.
You're just there with the bad news.
It gets worrisome. Hey,
Yeah.
guys, you keep us, though, up to speed. Thank you both so much. Will Wade, Power and Renewable Energy Editor, and, of course, Josh Saul, Energy and Climate Disasters Reporter here at Bloomberg News. Coming up, climate change one problem. So, too, is the nation's $28 trillion worth of debt. That's next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower across the board ahead of the Fed decision tomorrow. The Dow, the S&P, NASDAQ all in the red. We have got the Dow Jones Industrial Average on track for its 9th day of losses. That would be the longest losing streak since 1978. Here's where we stand. S&P now down 39, a decline of 0.6%, down 0.8%. And NASDAQ is down 95 now, a drop of 0.5%. The Russell 2000 index of small cap shares lower by 1.1%. 10-year at 4.38%, the 2-year 4.24%. Gold down $6 the ounce, 26.46 down 0.2%, and West Texas Intermediate crude right around 70 a barrel, 70.15 right now, down 0.8%. Bitcoin at 106,344 Bitcoin, up by 0.3%. Home builder sentiment for the next 6 months rose to the highest in more than 2.5 years on optimism that the incoming Trump administration will help remove construction regulatory hurdles and boost sales. That, according to the National Association of Home Builders and Wells Fargo. Among home building stocks, they're lower. Toll Brothers down 1.7%, KB Home down 1.5%, and Pulte now lower by 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. All right, yeah, so you're nominated to be the next U.S. Treasury Secretary. Cool, right? I mean,
it's cool.
Right, cool. Just ask Scott Bessent.
Scott Bessent.
Bessent, forgive me. Yeah.
I'm just messing with you.
We keep going to the newsroom. We're like, let's get this right. Let's get Bessent, Scott Bessent.
I take the blame for that. I was actually trying to mess with Carol.
You kept planting things. I'm like, don't. All right, Scott Bessent. And yet, check this out, everybody. If he's confirmed as President-elect Donald Trump's Treasury Secretary next year, his new job will be to ensure that the U.S. government doesn't face on his watch the kind of make-or-break moment that he saw other nations experience during his decades-long career in finance. I mean, what could possibly go wrong with $28 trillion in U.S. debt?
I mean, it is the U.S. government debt load.
Yeah, it's massive. All right, this is today's Bloomberg Big Take. Let's get more on it. With us is Chris Ansey. He's Bloomberg News senior editor. He's out there in our Bloomberg News Boston bureau. Chris, forgive us. We're kind of in a hashtag sarcastic mood today.
I noticed. Carol, here's the way to remember it. It's Bessent like crescent.
Oh.
And crescent is kind of the shape of the U.S. debt load, right? It's a crescent.
Love it.
All right, Chris, you are the man of
The
the
control
hour. I
room
love
is,
that.
The control room is hollering and clapping at that. They love it.
Crescent,
We love
Bessent.
it.
I will remember. Thank you for that. Tell me about, though, that U.S. debt and its fiscal house. We've been here before. We've talked about it before. Go back years. We talked about the bond vigilantes. And yet, something feels a little bit different this time around. Give us some context and perspective.
Well, one thing that's different is that we have an incoming Treasury Secretary, assuming that Bessent gets confirmed by the U.S. Senate, who specifically is pledging to narrow the deficit. Janet Yellen, the outgoing Treasury chief, spoke about the need for fiscal consolidation over the long haul, but really never made it a target. So Bessent is coming in saying, we got to get this deficit to 3% by 2028. It's 6% and change relative to GDP right now. So that's one thing that's different. But another thing that's different is that the current trajectory for that deficit is a whole lot worse than it basically is for any incoming Treasury Secretary in modern times. So the CBO back in June, in its benchmark projections, anticipated a 6% deficit averaging over the coming decade. And that assumes that the Trump tax cuts that are scheduled to expire at the end of next year do expire. So those are kind of, not realistic projections. And if you go back to when Yellen took over, the 10-year trajectory for her was 4%. So this is a whole lot worse.
Oh, so Chris, how do we do this, or how does Scott Bessent do this? How does the U.S. government do this if they're not even considering raising taxes?
Yeah, basically the people we spoke to said it's impossible. You hear Bessent and Trump, and they say that, well, we're going to just grow ourselves out of this. And if you have a bigger denominator and bigger GDP, that will shrink the relative burden of the deficit and the debt. But the context here is that over the past 4 years, we've been growing on an average of about 3%, which is faster than most people think is sustainable over the longer term for the U.S. So if you're already growing at 3% and your deficit is at 6% of GDP, how do you grow? There's no acceleration potential.
Right.
When Obama took over, the deficit was 10%, but that was in the middle of the Great Recession. And so as the economy came back, yeah, you could kind of grow that down. And with a little fiscal consolidation with the Republicans in Congress at the time, you remember the mentality was deficit reduction. They did shrink it to 4% in 4 years. But that was probably at a cost of growth because they were just there was so much austerity.
Okay, don't throw anything at me. But what about those out there who say it doesn't matter until it does matter? It doesn't matter right now.
I think that's exactly right. If you look at the Treasury market right now, 10-year yields at whatever it was, 4.4%, we're not seeing signs of concern. You look at Japan, which has had a much bigger deficit and debt load for a long, long time, and their yields are even lower than U.S. ones. So this doesn't become a problem until it does become a problem, as is the want of markets. But the problem is, if it does become a problem, this is a $28 trillion problem, because that's how much in marketable U.S. Treasuries there are outstanding. So it's not something that you really want to just wager everything will just go fine, and we can just kind of sit back and live with 6% deficits.
And I do wonder, Chris, how many people just say, well, listen, we just keep kind of passing the baton on from administration to some extent. And where else are investors going to go? The U.S. government is good for it. Nobody's worried about the U.S. government really defaulting. So I just do wonder if this problem just continues to exist, or is there what ultimately will make investors say, no, wait a minute, we're not so interested in U.S. debt. We've got a problem here.
Right. Well, one of the people we spoke to for this story, Brian Riedel at the Manhattan Institute, former Republican staff member at the Senate Finance Committee, said you need two of three conditions for some kind of deficit reduction agreement. You need a crisis, you need popular support for fiscal tightening, or you need a bipartisan climate in Congress. And right now we have none of those three.
What makes investors start to care about this? Is it the moment that other countries stop buying our debt?
Well, foreign buyers are certainly a significant part of the market, but as you guys know, market narratives can shift very quickly. And we have seen over the past couple of years periods when the Treasury market did show signs of concern about the level of debt. If you look at late summer, early fall of last year, when the Treasury was planning to ramp up issuance of longer-term securities, that did become part of the narrative. And we did see, maybe half a percentage point, I can't remember exactly, half a percentage point jump in 10-year yields. So the potential is there. What would it be? Maybe it's a bad auction. Maybe it is, right, Congress passing a tax package that investors don't like. We won't know until we see it.
Yeah, and I think the other aspect, we've run out of time, but just, servicing that debt, there's a great point in the story. In the fiscal year through September, the Treasury spent $882 billion on net interest payments, with the figure exceeding the Defense Department's spending on military programs for the first time. That part of the budget alone was equivalent to 3.1% of GDP, the highest ratio since 1996. Yeah, the debt's a problem, but then you've got to service it, and that becomes more problematic. Chris, great stuff, as always. So appreciate you coming on to talk to us about it. Chris Yancey, senior editor at Bloomberg News, joining us from our Bloomberg News Bureau. All right, everybody, you are listening and watching Bloomberg Business Week. More on the Fed.
listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
All right, count it and weep, folks. Just 2 weeks left in 2024. A lot of market-moving activities this year, to say the least, from a U.S. election, global elections, to wars between countries and between countries when it comes to technology, and so much more in between. There was a lot going on this year, and we've got a great voice to kind of think about it and think about what comes next. Bloomberg News global macro strategist Vince Signorella, he does keep a watch on all of this for us, talking to traders who are in it every day. And lucky for us, he is here at Bloomberg headquarters. How are you?
I'm hanging in there, doing okay.
It's good to have you here. It's good. Well, there's a lot, I feel like, for all of us as a country, as a world, and then individually, a lot coming at us.
Yep.
You have seen so much, and I'm not trying to age you or anything.
No, that's okay.
But I just think it brings a certain wisdom when you look at market cycles. So what do you think about kind of where we are right now?
So it feels to me, at least from the equity standpoint, that we're approaching the end of things, if you will, in terms of a rally.
Because it's tired fundamentally, or what?
There are a couple of subtleties that are going on that I think people aren't really looking at. Number one is there's a lot of froth and excitement in the market. So as we all know, the Conference Board does a survey every month, and we get expectations, prices, et cetera. But in one of those questionnaires, they ask households what they think of the stock market. Is it going to go up or is it going to go down? In the most recent survey, it's reached the highest positive expectation we have ever had, and the divergence between positive and people thinking the stock market's going to go lower is the widest it's been since the financial crisis, when the situation was reversed and people thought markets were going to go down and not up. And they were wrong in 2009, obviously.
Still remember that Barron's cover, March of 2009, when I think, can't remember who it was that made the call, and I'm sure a lot of people made the call, that it was like that was the bottom of the market.
Yeah.
It felt pretty dismal.
And if we're in the same situation where they're wrong again, we're probably near the top. The other, as you guys have mentioned, I'm sure countless times, is the tariff situation. One underlying part of inflation is import prices. No one really keeps that close an eye on it for whatever reason. But it leads CPI by a good length, sometimes as much as 9 months. And we're starting to see it pick up. It's been picking up since the summer. The expectation realistically is that, especially with tariffs, import prices are going to keep increasing. Mathematically impossible for CPI to go down in that situation, at least what we've seen historically. So if you've got rising CPI, rising inflation, the Fed's not going to be able to cut.
If that is indeed the case, and given what we know about the way that President Donald Trump looks at the markets as a report card in real time for what he's doing, doesn't that make him think differently about these policies?
You would think, but I think there's a 50-50 chance that he would. The other side of that coin is that he'll cut taxes to make up for it, and basically use the political gains of saying, yeah, I know I didn't get rid of inflation like I said I would, but I'm putting more money in your pocket to be able to afford it. I don't know if that's going to be the approach. No one knows what that's going to be the approach is, but I will tell you one thing. Once inflation is in bed, it's really, really, really hard to turn around. It's just difficult.
Isn't it a certain or higher level? I mean, is this your view? Is this what traders that you talk to feel, that inflation is kind of at a higher point? Like, I think about the 2% target rate.
Yes.
But everybody keeps thinking about, is the Fed going to ultimately say that's not the target anymore?
I don't know if they'll ultimately own up to that, but realistically, with a $36 trillion fiscal debt, the 2% target is long gone. I mean, I think the neutral rate's closer to 3.5.
Wow.
3 maybe, 3 to 3.5.
Yeah.
If that's the case, the Fed funds rate after tomorrow is only going to be 100 basis points higher than where the neutral rate is. So there's really no rush to get down to the neutral rate if the possibility is that CPI is going to come up to where the Fed is. And I think somewhere in 2025, that reality is going to come home.
Vince, sitting here a year ago, did you think that the S&P 500 would be up 27%?
No, unfortunately. Because I will be honest with all of you, I bailed in the beginning of March.
All right, but then what does it tell you that we've charged ahead?
Well, I mean, when I look back at the last 10 months, and I was wrong. I thought I thought we would stall a little bit sooner. I didn't really see where economic growth was going to be as strong as it was. I thought inflation was going to be a little bit quicker than it was, and I thought the Fed was going to hold a bit longer. That obviously didn't happen. The Fed did not hold as long. The economy was roaring. I really didn't see the consumer as strong as it was, given when you looked at where disposable income was as a percentage of savings and stuff. It was declining rapidly. So it was a realistic assumption to think the consumer was going to be stalling a little bit. And that, of course, we're a consumer-driven economy. One would have thought things would have rolled over a little. That didn't happen. We borrowed a lot. Consumer credit went through the roof. And that's where I think the consumers got the money to spend.
We're going to actually get a read on how consumers are doing in debt and kind of credit levels with Bank of America CEO Brian Moynihan. He's going to join us, our David Weston, in the next hour. Yeah, I don't know. Interesting. Who'd have thunk? Anyway, great to have you here. Thank you so much.
My pleasure. Thanks for having me.
We hope we can reach out to you again in the new year. Looking forward to it. Bloomberg News global macro strategist Vince Signorella, as we said, here in studio. That's going to do it for this hour of Bloomberg Business Week. For those who are watching on television, the close is coming your way in just a moment. And Brian Moynihan of Bank of America, the CEO, at the top of the hour.
Hey, a little later in our program, too, we talk about Elon Musk because he's got Tesla, he's got SpaceX, he's got Neuralink, he's got The Boring Company, he's got X. How about a new Montessori school in Texas?
Wait, what?
Yeah, exactly.
He is everywhere.
Yeah, Deanna's going to tell us all about it. I mean, it's pretty wild.
Sorry, I had nothing more to give you. Do not go anywhere. We've seen stocks off their best levels of the session. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, everybody, we are 1 hour away from the closing bell on this Tuesday, December 17th. Carol Masser along with Tim Stenivek live here in our Bloomberg Interactive Broker Studio. This is Bloomberg Business Week. In just a moment, we are going to hear from the CEO of one of the nation's largest banks. We're talking about Brian Moynihan of Bank of America. We just were talking about Vince Signorella about consumers and debt and so on and so forth. We should get a good read on this and just really a great big look at the kind of health of banking, if you will, credit, and how the consumer is doing.
In the meantime, the S&P 500 down 0.6%, the NASDAQ down 0.5 percentage point, the Dow down 0.9%. Carol, did you see? I know we don't pay super close attention to the Dow just because of the composition of it.
Sorry, Dow doesn't get a lot of love anymore.
The Dow Jones Industrial Average is headed for its longest losing streak since 1978.
Well, it's kind of interesting. Like, I don't know, that feels like a significant, especially on a day when we're talking about, is the market tired? Has kind of the run, we're overbought? Is it time to see maybe is potentially some investors who seem to be capitulating and taking kind of all of their cash and pouring it into stocks, according to Bank of America? Like, you do wonder, is it time to then, okay, is that a signal of a high? I don't know.
That's a good question. Hey, no good segue here. I was going to say speaking of highs, but no, got nothing.
All right.
We can talk EVs a little later in the program. And speaking of EVs, we're going to talk about Elon Musk's Montessori school in Texas. There's a lot there. You know, he's got about a dozen kids. I say about. That's what we know about.
Yeah.
The majority of, or half he's had in the last year. So is it a school for them?
I don't know, right? Sounds kind of pretty exclusive.
Yeah.
So we're going to get into that in just a moment. And then also, as we mentioned, we're going to talk about EVs. We've got the CEO of the EV charging infrastructure companies trying to convince companies to make their fleet electric. But we're also going to get into maybe some of those tariff threats and what kind of policy might come from a Trump administration and what that might impact certainly the world of EVs. So we're going to check about that. Right now, though, we do want to head over to Bloomberg's David Weston, sitting down with the CEO of one of the nation's largest banks. We're talking about Bank of America and Brian Moynihan.
For our Bloomberg audiences worldwide, I'm David Weston. I'm delighted to be here with Brian Moynihan. He, of course, is chair and CEO of Bank of America. So, Brian, thank you for having us here to your trading floor.
Happy holidays first, David.
Yeah.
And thank you for coming. And all these teammates have been here all day waiting for you. So.
yeah, waiting for something.
inflation all the way into 26 to get down to the target. If the inflation's moving down and we can grow this economy, that's actually not a bad place to be, honestly.
Does this economy need any fiscal stimulus at this point? And it looks right now like the so-called Trump tax cuts will get extended. And also, candidate Trump is talking about a lot more tax cuts. And given the fact that we're above a trend on growth and we're close to full employment, do we need any more stimulus?
I'm not sure you need more stimulus, just like we didn't need the stimulus probably in 21 because the pandemic goes through the system. But the question is, if you lower taxes and use it to reduce the debt, the question is how stimulative those activities are. And that's where the Treasury Secretary appointee has got to figure it all out, because he's got to call the balls and strikes about how it all fits together. And he's a markets-oriented person. He knows that if it gets too far out of line, we just ran, for the last fiscal year in the United States, an operating deficit of $1.8 trillion, which is equal to the entire GDP of the country of Australia. And so we got to realize that the impact we have if we don't get this debt back in line. So I think everything on one side has to be governed with whether to do on the other side, offset it, and whether it has that much effect. Right now, the economy is moving along. Consumers are spending. It's up for the 2-week period around the holiday, Thanksgiving holiday. It's up 5% over last year. That is good and solid. That is not overheated at all. But that came off the lows a little bit this summer, where I was a little nervous that they were going to let the consumer drift too far down. So between interest rates being cut a little bit, between the enthusiasm around the election, the markets being up, the consumers are spending more and telling us they're going to spend more for the holidays, which is good for the general economy. We got to keep them in the game not by overstimulating, by overdoing, by keeping the game just by getting a good core economy going with good deregulation activities, good tax policy, good immigration policy. These are hard things, but I think they're off working on it.
Let's stay on the consumers here, because you know so much about the consumers here at Bank of America, given your relationships. How is the consumer doing? I know they're spending, but I've seen numbers that suggest they're borrowing more. And in fact, St. Louis Fed has new numbers out from as of October. The defaults are up as well. Are you worried at all about the consumer?
So this is go back to what you're thinking about, which is if you say the levels of consumer credit card debt are above where they were in 19, it's 5 years later. They should be above where they are in 19 because the economy is 30% bigger. So a lot of these nominal numbers, forget to put them in relative scale. If you look at it on a relative basis, it's still far below where it was in 19. And the credit was very good then. If you look at the defaults, they picked up and normalized defaults and delinquencies to where they were in 19. 2019 was a 50-year low in credit costs in our company. 50 years we had to go back to find. So we got to be a little careful about what we're comparing to. Everything's steady and fine now. Credit quality consumers, their ability to borrow, the household income, they feel a pinch of the higher prices. Part of that is real, and part of that's just mental. If the price of eggs doubled, it's hard to ever tell anybody it's okay because they have more wages. They're just never going to agree with us, and that's the economist's view of an economy versus human beings' view. But all things, if they wouldn't be spending money the way they are in a rational way at 5% year over year for the last couple of weeks, 3.5%, 4% for the month of November, and likewise it looks like that'll be December. If they didn't feel confident, and why is that? All comes back to one thing: 4.1% unemployment rate, wage growth of 3%. That's the core. Now, what could disrupt that? A lot of things, but right now that's the condition of the American consumer. They have the ability to borrow, and they're borrowing rationally. They are employed. Their wages are going up. They feel the pinch of inflation. They're trying to work that all through, and they're trying to have a good holiday season. So we'll play that. What will hurt that worse is unemployment moving up, and right now that's not predicted to happen at all next year. It's supposed to go, our team has it 4.3 at year end next year. You and I have been, for most of our business careers, we've been jumping over this, the moon if we thought unemployment was 4.3 for 2 or 3 years in a row or less.
Take all of that economic data, put it all together, and tell me what the Fed should be doing. They're meeting today. We'll get a decision tomorrow. 25 basis points seems to be baked in as a cut. But should it be cutting further beyond that 25 basis points, given the strength of the economy and all the things you just said?
If the economist's view is you have to have a real rate structure across the curve of 75 basis points, 100 basis points. If you're 475, 450 now, and the inflation rate's 3.3, that's bigger. So you got to start to bring it in normalized. We got to get to, positive sloping curve, a curve that has real rates across it. An inverted curve means something anticipatory is going to go the other way. All that's got to happen. So I think they need to bring it down a little bit. They just have to be more careful because the economy is stronger than we thought 3 months ago, 6 months ago, but it still has potential weaknesses. You and I haven't even talked about what's going on outside the United States that could affect the United States. Not tariffs and stuff, but wars. You know, what happened in the Middle East the week, what happened in Korea, what's happened in Germany. All these political changes could impact the United States ultimately and reverberate with them because we sell a lot of goods in a lot of these countries. And by the way, we buy a lot of stuff from these countries. And so, you know, we're inextricably linked with the outcomes of some of these things. And so we have to be careful. But if you look at it in the U.S., they ought to cut rates, bring them, our team's view is they bring them down to 375-ish type of level, 3 more cuts from where they are today. But they'll be higher in the current context. But if you look back, excluding 2008 till now, a 3.5%, 3% Fed funds rate is the norm, not the exception. It's only been the exception in the last 15 years.
But it is different from what we thought it was going to be. It's higher, I think. Yeah. The neutral rate's higher than it was. How does that affect your business, if at all?
Well, the question of, everybody says the higher rates help higher rates. The question is why they're there. If we had a normal rate curve from, say, 3.5% on the front end to 4.5% at the 10-year, you know, and the economy is growing at 2%, that's a very good place for banking. Delinquencies would be low, cost of credit and its availability is there. You know, our deposits are better suited at a higher nominal rate because when they go down, we have 0 floors on a third to half of our deposits that just can't go any lower than 0 unless we start charging people to give us their money, which isn't going to happen. So it's better for us. But if the reason why they're higher is to choke off inflation, that can be not so good because that will probably lead to recession. So the question of what's the underlying economy doing less than the rate structure. And the underlying economy right now growing at 2.5 with a 3.5 to 4% Fed funds rate and a 4.5% 10-year rate would be great for our industry. And that's why NII just keeps growing every quarter. We were 13.9, 14.1, 14.3, and you expect that growth to continue. And it's just walking up a ladder back to a level, and you know, that peak we're like 14.8 or 15. So
we have people out right now saying not 4.5, maybe 5% or even 6% on the 10-year. Do you put any credence in that?
Our team doesn't see that, you know, and I have to rely on the experts that spend, you know, we wrote a research paper with a 5,000-year interest rate, low in interest rates, and I said, how do you know that? And they said, well, we went back and did research. So we have, Candace's team's a powerful team and the best in the business. So they think it's, you know, 4.5-ish is kind of where it is. And as the rate structure comes in, is there potential for that? Yeah, that's probably when something else is going on that is not good, and therefore there'll be faster adjustments, which might bring it back in. But you know, you think about it, to go from a 1.5% 10-year to a 4.5% 10-year, that's a lot of movement, and it's very restrictive on activity till the activity adjusts out of that, and that's what we're seeing now.
You mentioned Donald Trump returning to the presidency next month now. How do you take that into account at Bank of America? I mean, what do you anticipate? We don't know exactly what will happen, when it will happen. So how do you plan for that? What will it mean for Bank of America, do you think?
Well, so I think, you know, one of the larger contexts is the oldest part of our company has been around for every presidential transition except for George Washington. So we've been through this before, we'll be through it again. But the real fact of the matter is, if you think about what the policies are that President-elect Trump got elected on, it's inflation and immigration stuff, but it's also about deregulation. And our industry needs to have a sober look at what the right regulation. 15 years ago, 16, 17 years ago, after the financial crisis, we had to put new capital, new liquidity, and restore the confidence of America. Since 10, 12 years ago, you know, the capital is about right in the industry, yet we kept ratcheting it up. When we ratchet up capital, that draws down our ability to lend. It makes credit harder to get and more expensive. And on a worldwide competitive basis, our capital ratios are much higher. And then the day-to-day supervision. So the idea of bringing that regulation back in the middle, and then, frankly, for the good of the industry, getting it settled someplace so that we can build a model around it. What happens now is we do this. And so we're hoping it brings it back to the middle. That's what and by the way, that's what our customers like about their industry. So whether it's the FDA, FTC, getting deals done, the enthusiasm, it's all about, wait a second, now we can swing it back to the middle and go get stuff done and make the private sector, which is the reason why America's successful, lead as opposed to the governmental sector.
So when you hear about a pledge for deregulation, is the main thing you hear with your Bank of America ears on is the reserve requirements?
Capital reserve, liquidity, CCAR, there's 1,000 different things. What I really hear about deregulation is our clients also saying, you know, let's do deals, including our banking client. You know, we have our investment banking bank clients, and you've seen 4 or 5 deals passed. The other day, the selling company in a transaction won't sell if there's a lot of uncertainty around it. No matter what the value is, no matter if I don't think it's going to get done, I don't sell. That's what was going on for the last few years. Any deal of size was going to get hung up somehow, unless it was so different. It was like a private equity firm buying a company had no other firm. And that's not good for letting these American companies get more successful and grow. It doesn't mean you're going to be anti-competitive. It doesn't mean you're going to have that. There's huge price desire in the market. There's great competition, all that stuff. What it means is our companies can grow and make the kind of strategic choices. That happens in the banking system. We can't do any acquisitions, but it happens to our clients. It happens around us. That'll be good for us. But in ours, it is about capital liquidity and day-to-day supervision.
What is the biggest change coming up for Bank of America because of this new administration, do you think?
I think it'll be the economic atmosphere of deregulation, how it applies to us specifically, how it applies more generally. And that will be good. Now, we got serious issues, as I said, around the outside world. We got serious issues of what the right balance to get the debt back in line with our GDP and keep it there. But those issues are not new, but they have to be dealt with because we've been, in some ways, not dealing with the debt issues or not dealing with immigration for since I've been CEO. We've been talking about solutions here, and we got to now start to implement some of those to just bend the curve of debt growth, get more and more cash in to cash out as more rational position, and then and hopefully if you get the regulatory policies, you outgrow that, and that's basically what our research team thinks. They've added a little bit to their growth since then, saying that combination of policies, some offset each other, some will add to it, but in the end of the day, it'll be a little bit more growth oriented. We'll see what happens.
Brian, thank you so much for being on Bloomberg. That is Brian Moynihan. He's Chair and CEO of Bank of America. Back to you.
All right, David, thank you so much. Again, David Weston, Bloomberg's host of Wall Street Week, there with the CEO of Bank of America, Brian Moynihan. If you missed any of that conversation, be sure to check it out on the Bloomberg and at Bloomberg.com. But just some of the top headlines. He talked about U.S. debt, a story we talked about a little bit earlier here on Business Week. Brian Moynihan saying we've got to get the U.S. debt back in line. But he also mentioned that he sees that the U.S. economy is moving along. His words, he says consumers are still spending and up around 5% over this time last year.
Yeah, consumers spending more, interest rates being cut a little bit, markets being up, unemployment rate not expected to move up next year. Also, he said that the industry needs a sober look at regulations, Carol.
Yeah, it's kind of interesting. I mean, a lot of regulations that were put into place coming off of the GFC, the Great Financial Crisis, when they many of the big banks needed a bailout from the U.S. government. Those loans, we should point out, were ultimately paid back, but there were also restrictions held on, how much banks had to kind of keep on hand, if you will, in terms of reserves to make sure that if they run into trouble, they had their own money to kind of deal with that. So it'll be interesting. It's also a U.S. banking industry that now faces a lot of competition from the private market industry, be it private equity, but even more so private credit, where a lot of companies are turning to, certainly smaller and mid-sized companies, when they need any kind of banking services or loans or what have you.
I was interested in what he said about consumer spending. Remember, he's got such a great view on what consumers are doing through their checking accounts, through their debit cards, what he's seeing on credit card activity. Consumers are spending. The economy's moving along.
Yeah, absolutely.
We'll get more color on that when they report earnings.
Yeah,
yeah,
next earnings season. Exactly. But I think about what Vince Signorella said, that there was a lot of worry about consumers kind of finally running through all their pandemic money, but he says, brought about the increases that we're seeing in debt levels.
Yeah, that's a good point.
By consumers. So whether or not at some point you've got to pay back that debt, right? Or just like the U.S. fiscal debt.
That's what I was thinking of. Today's big take.
Right?
Or you just let it keep going up.
Yeah, that doesn't always work.
Scott Bessent's
not for a consumer.
Scott Bessent's got his work cut out for him.
Bessent, like Crescent, in case you missed that.
He's got his work cut out for him.
He does. The U.S. government has its work cut out for them. Listen, guys, we've got about 40 minutes left in today's trading session. We're looking at stocks pretty mellow, lower across the board. S&P down about 0.6 percentage point, and the NASDAQ 100, it is down about 0.2%. This, of course, as we await tomorrow's Fed decision. More to come right here on Bloomberg Business Week.
Coming up, it's Bloomberg Plugged In, your weekly look at EVs, brought to you by Audi. Visit your tri-state Audi dealer and get behind the wheel of the Audi model you've always wanted.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story headline right now on the Bloomberg Professional Service. The insurance CEO shooting suspect Luigi Mangione has been indicted in New York for murder. He's been charged with first-degree murder in the death of Brian Thompson. Mangione, by the way, has 2 court appearances tomorrow in Pennsylvania. Those headlines right now on the Bloomberg. We'll have more details as they become available. Bank of America CEO Brian Moynihan wrapping up a conversation with our David Weston right here on Bloomberg Radio. He told us that the U.S. economy is moving along and consumers are spending. And he also had a number of other things to say about various other topics right here on Bloomberg Radio, including industry regulation and the incoming Trump administration.
The oldest part of a company has been around for every presidential transition except for George Washington. So we've been through this before, we'll be through it again. But the real fact of the matter is, if you think about what the policies are that President-elect Trump got elected on, it's inflation and immigration stuff, but it's also about deregulation.
Bank of America CEO Brian Moynihan in a conversation with our David Weston here on Bloomberg. Bank of America shares right now trading lower, down by 1.4%. Stocks lower across the board. S&P down 37 ahead of the Fed decision tomorrow, down 0.6%. The Dow down 369 now, down 0.8%. NASDAQ lower by 0.5%, while the Russell 2000 index of small cap shares down 1.3%. 10-year 4.39%. The 2-year 4.24%. Gold down $6 the ounce, $26.45, down 0.3%. West Texas Intermediate crude just above $70 a barrel, down 0.7. And Bitcoin now up 0.2%, $106,277 on Bitcoin. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie. Do appreciate it. It is time for another edition of Bloomberg Plugged In, your weekly look at EVs. And Carol, as always, no shortage of goings-on when it comes to the world of EVs.
So much going on.
You pointed out this story to me earlier today. You were like, did you see this?
I'm kind of blown away by this.
Honda and Nissan are preparing to start negotiating